To go until the start of Friday's equity session. I can tell you that futures have been pretty undecided as we've been working our way towards the start of Friday's equity session. Plenty of individual corporates to talk about, though. For a Friday, a lot of company news, not to do with earnings, but to do with takeovers in the main and combinations of businesses, assets changing hands. We'll get to all of those individual stories through the hour. But this is the picture we've got for European equity markets right now. The FTSE 100 out of the gates, but fairly flat. The IBEX is down by 0.2%. So we got a sluggish start to trade as the futures had suggested. US futures continue to point to a fairly flat open stateside. NASDAQ futures do point to the upside by around 3 or 0.4%. But here in Europe, we're sluggish. The CAC 40 now open up by just 0.1% or so. So not really going anywhere in a hurry when it comes to European equity markets. Some of the individual stories, though, really interesting. We'll keep an eye on the Spanish banking sector. We got more information around CaixaBank and Bankia, not moving share prices all that much this morning. And the IBEX, as I mentioned, opening 0.3% to the downside. But a lot of that, of course, we knew already that there was a combination planned there. The LSE a little bit weaker on its talks with Euronext. Euronext up by 2.6%. That's about the Italian exchange, of course. And we're also keeping an eye on what's going on at Ericsson and Roche, so plenty of individual corporate stories to deal with. Let's get into where we are on these markets, and with an eye on these NASDAQ futures that continue to point to the upside, let's have a look at where we are on the NASDAQ story, on the tech story. After the tech-heavy index saw declines during the past two sessions, the volatility highlights just how vulnerable the wider market has become to wobbles in the mega-cap stocks. Joining us now to discuss is Danny Berger. And Danny, how severe is the equity market concentration in tech stocks?
Anna, the concentration at this point is unprecedented. We have been talking about this story probably for the past couple years, but it keeps getting more severe. If you look at the gains so far for the entirety of the year, for the S&P 500, really for the global index as well, all of the gains you can attribute to the top 10 stocks. And of course, within those top 10 stocks, it's overrun with the mega cap index. Probably the only index that's a little bit better in this regard is Europe, more diversity within that. But according to SocGen, they say that investors are now waking up to this fact. They're concerned at how vulnerable the market is at this point because we're so exposed to tech. Really, the index moves are all down to what these big 10 do. And if you look at what the average stock has done so far this year, basically for every index, save for the NASDAQ 100 and EM there, stocks are negative. You wouldn't think that by just looking at the main index, but it's because they have the support. It's because of the weighting towards these bigger mega cap stocks that things don't look as bad as they are. So again, I say SocGen says people are waking up to this fact. We have seen the equal weighted S&P 500 outperform so far this month. So is the trend changing? Perhaps, but again, this has been a defining feature of the market over the past couple years. So we need a bit more time to say that people are finally turning away from the big 10.
Yeah, and just looking at comparisons between Europe and the US gives you a really good look at the difference that tech makes, with the NASDAQ up by 21% year to date, with European equity markets all underwater. And in fact, it's only the DAX that gets close to being positive, but even that is now a little bit negative on the year. There's other news around the tech sector that you might have thought might throw tech futures, or NASDAQ futures rather, off this morning, but they haven't done that. What is the latest on the proposed deal between TikTok and Oracle? Let's start there.
Sure. So it looks like the plan between a combination or at least a partnership between ByteDance's U.S. Business of TikTok and Oracle, the plans for now look like they might issue an IPO. Now, this is after talking with the Trump administration, who, of course, has been setting sort of the terms or the deadlines for getting a deal done. And of course, we've also learned that ByteDance is increasingly confident that Beijing will also approve of a deal. So it looks like we might have, within the next year, a company IPOing called TikTok Global. That's according to Treasury Secretary Steven Mnuchin, who sent ByteDance a revised term sheet, he said. So it certainly looks like things are moving along in those regards, Anna.
Yeah, and really interesting to keep an eye on Tencent news flow as well, and the extent to which the US administration wants details of how companies that work with Tencent, so games makers that maybe have Tencent as an owner, how they deal with their data and the data they collect on Americans. That's part of the tech story too. I know also you've been keeping a close eye in, well, today and in weeks past, Danny, on all of the work from home news flow, the analysis of productivity and the like. What's the most recent news flow surrounding the return to the office? It seems like there have been setbacks for some businesses that have been trying to bring people back to the office.
Yeah, and I think one of the most fascinating things, and we've really been talking about this, how a lot of banks seem like they're on different pages. So Goldman Sachs, they were really aggressive in the beginning, opening their offices pretty early, trying to get people back in. Well, Bloomberg has learned that in their New York office, one or more traders and workers there have come down or have tested positive, rather, for coronavirus, so they've had to send some people home. Barclays as well, their Canary Wharf office here in London, also had people test positive for coronavirus, so some of their employees are being sent home as well. So it really shows how touch and go the situation is. Yes, it's all well and good to say in the likes of JP Morgan, yes, we think that it's good and healthy to have people in the office, but they've also had to send some people home. Larry Fink yesterday also was talking during a virtual conference saying that he thinks it's really important that we get this culture of people around the water cooler sharing ideas. It's really this corporate culture he's concerned about. But I should say BlackRock, for its part, is telling their employees that they can stay home for the rest of the year. So unlike JP Morgan, who does think that, yes, people should be back in the office, is what Jamie Dimon is saying, Larry Fink is allowing people that optionality to continue to work from home.
Yeah, I'm sure there'll be no model that works for all businesses, will there, Danny? Because all businesses are different. The geographical footprint will make a difference as well. As we were just talking to State Street's CEO for EMEA, and he was suggesting that, they can bring people back in Germany fairly easily, but in London it's different. The reliance on public transport is a different story. Danny Berger, thank you very much for setting up a couple of interesting conversations for us this morning. Joining us now is Eric Norland, CME Group's senior economist. And Eric, we've got European equity markets not going anywhere in a hurry really here. We have US futures suggesting a fairly flat start on Wall Street. Good time to take the temperature of the US economy and work out how far we have come and how far we still have to go. We've heard a lot on that front from the Fed, of course, this week. What is your assessment of the weakness still in the US economy, how weak it will be into the fourth quarter?
Well, if you look at the tracktherecovery.org data that measures real-time consumer spending, it was showing at the end of August that consumer spending was still down on the whole about 7% versus where it was last year. If you look at other real-time data, it looks like restaurant bookings, it looks like people checking in for flights at airport are still down about 50% and down about 70% respectively. So I think this economy really has a long, long way to go before it's fully healed.
And in particular on the services side of things, have we seen the peak, though, in unemployment, or do we not know because we don't know what the winter will bring?
Yeah, I think we really don't know, precisely for that reason. We don't know what's going to happen during the winter. We've already seen a few countries like Israel, for example, going into a second lockdown. There is now discussion here in the United Kingdom of a potential second lockdown during the school holiday period in October. And you have to remember, 90% of the world's population lives in the northern hemisphere. So the world's northern hemisphere is about to go into winter. This is going to have, I think, really big consequences depending on the evolution of the pandemic and how people respond to it.
And so with all of that in mind, Eric, how do you make an assessment around inflation? Some talk to us about, inflation ready to really take off in the US. Other guests talk to us about how inflation is going to be moribund for many years to come. We're dealing with some of the pre-pandemic factors that kept inflation at bay, and according to some economists, are pretty poorly understood.
Right. So I think that the pre-pandemic factors are pretty much all still there, and even more so. So this has thrown so many people out of work. And the fact that so many people are out of work, I think, is going to really keep a lid on any advancement in wages. So this idea that somehow we're going to go back to the kind of cost-push wage inflation that we had during the 1970s, to me, is really not at all likely. I think that we are, in a sense, seeing inflation. The central banks are creating a lot of money, and that's inflating asset values. We've seen the prices of gold and silver soaring, technology stocks being very strong. Is the potential, I think, for real estate, especially away from big cities and away from coastal areas, to see a lot of appreciation. But I really don't see a lot of consumer price inflation, and certainly not a lot of wage inflation.
Okay, stay with us, Eric. Eric Norland, CME Group senior economist, with us this Friday morning here on the European Market Open. Coming up, a ray of hope. Britain says there's been some progress on an EU free trade deal. And EU President Ursula von der Leyen also adds to the optimism. But key hurdles do still remain. We'll get details next. This is Bloomberg. Welcome back to the European Market Open. European equity markets starting fairly flat, a little more sluggish now. The FTSE 100 in particular down 0.2%. Actually, no, the CAC as well, also down 0.2%. So moderate levels of weakness for European equity markets this morning. Let's get a Bloomberg business flash for you. Here's Laura Wright.
Thanks, Anna. CaixaBank has agreed to acquire smaller rival Bankia to form Spain's largest bank. Caixa is paying a 20% premium, which values Bankia at about 3.8 billion euros. It's the biggest deal in the nation's financial sector for 2 decades, and it adds to signs that long-awaited banking consolidation in Europe is starting to kick off. Apollo is exploring a takeover of German plastics maker Covestro. Sources have told Bloomberg the buyout firm has contacted the company in recent weeks. Covestro was spun out of drug maker Bayer back in October 2015. Its market value is around 8.2 billion euros. We're told discussions are at an early stage. No official comment yet. Tencent is under the microscope in the US. Sources tell Bloomberg the government has asked gaming companies linked to the Chinese giant to provide information about their data security. That includes Epic Games, the maker of Fortnite, 40% of which is owned by Tencent. No official comments from the companies or the Treasury Department. That's your Bloomberg Business Flash. Anna.
Thanks very much. Laura writes with your Business Flash News. Now, Britain says there's been some progress on an EU free trade deal. The government said a round of informal Brexit talks this week was useful, though significant gaps remain on issues including fishing and state subsidies. European Commission President Ursula von der Leyen added to the optimism, telling the Financial Times she's convinced a deal is possible. Eric Norland, CME Group senior economist, is still with us, and certainly the comments from Ursula von der Leyen moved the pound yesterday. It led to some volatility there. How concerned are you about the end of the year and the deal or no deal? Are you in the camp that says this is really material for the UK still, or in the camp that says with all of the coronavirus backstory and backdrop to this, that adds a very different take to how concerned assets should be or people should be around a no-deal Brexit?
Right. Well, I think that of the two stories, the coronavirus is the one that's by far the more impactful of the two. That said, the Brexit negotiations do add sort of an extra layer of uncertainty. We see that very much in the currency options markets, where the options on the British pound have become much, much more expensive than they normally are. Normally they trade maybe at a 6 or 7% implied volatility. Recently they've been up towards 12% implied volatility. So the currency market's clearly expressing a view that there's a lot of uncertainty here. And I think that that's very much to do with Brexit.
And do you think that talk at the Bank of England about negative interest rates, is that also to do with Brexit, Eric? Is it the fact that the BOE said yesterday they'll work with regulators on how negative interest rates could be implemented, is that a warning that if we get a no-deal Brexit, that this is something that the Bank of England could do?
Well, I think it's probably wrapped up in some way with the issue of Brexit, but I think it's also important to remember that the euro area just across the channel has negative 50 basis points interest rates. That's a huge interest rate gap between the United Kingdom, which is still at zero or slightly above zero, and the rest of Europe, which is at negative 50 basis points. So I think there's a lot of discussion, a lot of debate, but I don't know that they've actually reached any definitive conclusion yet as to whether or not to go negative.
What about the unemployment story in the UK then, Eric? Of course, many people will have been grateful for the protection that the furlough scheme has provided, but that will be coming to an end, it seems, at the end of October, to be replaced by something. We don't know how extensive it will be. Can you give an estimate of how high unemployment will peak, maybe looking at the US for inspiration, or is that not possible, given that we don't know what will follow the furlough?
Yeah, I think that we really don't know. We have to wait and to see what the public policy actions are. But I think in the absence of public policy action, we would see potentially a major rise in unemployment. In the U.S., for example, unemployment went well above 10%. The same thing could hypothetically occur here in the absence of some sort of action. But I would be surprised, of course, if the political authorities don't do something in terms of extending those kinds of programs.
And so with that in mind, what's the trajectory for growth for the UK economy, do you think?
Yes, I think the trajectory is very, very clouded at this point. It's very difficult to say. So it depends, of course, on the course of the pandemic. It depends to some extent, to a much lesser extent, on the outcome of Brexit. The reason why I say a much lesser extent with respect to this, I think the currency market offsets a lot of things that could happen with Brexit. So, for example, if we wind up with a no-deal Brexit, that would be, on the face of it, probably not good for the UK economy. On the other hand, the pound would probably depreciate. So it would make UK exports more competitive. By contrast, if we come to some sort of a deal, it's possible you could see a lot of upward pressure on the pound. So a deal in some ways would smooth trade flows, which might be good for the economy. On the other hand, a stronger pound would make Britain a little bit less competitive on the whole. So I think that the currency market is really the Brexit shock absorber.
Eric, thanks very much. Eric Norland, the CME Group senior economist, thanks for joining us. Eric will be continuing his conversation with me on Bloomberg Radio at 9 a.m. UK time. Coming, just to get to breaking news, actually, before I tell you what's coming up on the programme, we're just getting some interesting lines around Covestro. The share price of the plastics company Covestro up by just shy of 6%. That on the back of our reporting earlier that Apollo is said to be weighing a takeover of $10 billion for the plastics company. Well, now German media reporting that there are no takeover talks at this point, but we will keep across all the latest developments on that story. Coming up, the EU's green bond boom. Commissioner Frans Timmermans says the bloc needs to seize upon rising demand for green securities. We'll be hearing exclusively from the EU's climate chief next. This is Bloomberg. Welcome back to the European Market Open. European equity markets then a little sluggish, but not down by much. The FTSE 100 is underperforming, though, down by around 0.3%. We don't have much of a big move in sterling to speak of. Now, the EU's climate chief, Frans Timmermans, says rising demand for green bonds creates an opportunity for the bloc. He spoke exclusively to Bloomberg's Maria Tadeo after the Commission proposed a 55% cut in carbon emissions by 2030.
We did the analysis, very thorough analysis, and it shows clearly that 55% is something we can do, but if we go beyond 55%, the marginal costs become too heavy, the burden on our industry will become too heavy, and, which I think is an important argument, it sort of would take away the pressure from other parts of the world to do sort of similar steps. Because Europe can't do this, we're only 9% of the emissions, so we can do a lot, we can lead the way, but we can't do this on our own. We really need to convince our international partners to move in the same direction.
And right now there's a very clear timeline going forward in terms of the goals, but this needs to be approved by the European Council, the European Parliament, and of course the national parliament. So if you're a European citizen, but also an investor, what does the implementation look like? When is the year when we're actually going to see these targets come alive?
Yeah, we're going to come up with the concrete proposals in the different sectors by June next year. So that's when industries and society will see exactly what this means for their sectors. But at the same time, I have to say that there is a huge push from industry telling us, do this. You need to do this. You need to give us some predictability, some long-term security, no zigzagging, stay the course, and then we know what we need to do. And I think this is extremely encouraging. I think there's, frankly speaking, there's much more drive in the private sector than in politics to make this happen, because the private sector has to have this long-term view on what's going to happen with our investments. You see it in the financial sector. They're extremely worried to create stranded assets in the old economy. So they want us to give them some regulatory clarity, some predictability and long-term security so that they can invest in the right direction.
And that's a very good point, because we know that for the financial community and investors, they are interested in the ESG space. They're thinking this is perhaps a way forward when it comes to new investments. Is that something that you get a feedback from the investment community? Absolutely. We're very interested actually in?
Absolutely. We get a lot of questions, but also support from the financial sector. You know, if you see organizations like BlackRock making this really enormous change into the green economy, if you see them all, you know, waiting for us to come out with green bonds because they want to be part of that, I believe this is the moment to do this. And you know, we get one shot at this, because this is a moment where we were able to mobilize a form of solidarity on a European scale that probably cannot be repeated anytime soon. So we have this opportunity now. If we squander it, I don't know if I could look my kids in the eyes again.
And now that you mention, you know, those green bonds, that announcement yesterday, 225 billion euros in green bonds, that is huge. Is that something where you think the European Union is going to lead the way in this market when it comes to the regulation, when it comes to the benchmark? Is that where you think we can really become the biggest player?
I think so. I think Europe can really lead the way here. But there's huge interest across the world for this development. If we can show as Commission that we can handle this, that we can go on the markets, that the markets will respond to what we're doing, that this can lead to really successful investment, I think this will take off.
And based on what you're saying, I mean, it's pretty clear to me that you're saying the financial community is with us on this. But how about the rest of corporate Europe? And I'm thinking, you know, aviation, they've been at times critical, the car makers. What's the feedback that you get from them?
Well, for them, of course, they're in a difficult situation because they need to make this transformation. But at the same time, they also need to go through very profound reconstruction, restructuring because of the COVID crisis and the economic slump that resulted from that. So they have to combine many things. They have to keep people in jobs. They have to reskill people. And I think we really need a partnership between the private sector, between the different industries and the public sector to make sure they can do this in a sustainable way. And they will need support for this. They can't do this on their own, and we all need to take our responsibility to help them to get there.
That was Frans Timmermans, European Commissioner for the European Green Deal, speaking exclusively in Brussels to Bloomberg's Maria Tadeo. Really interesting to follow how that story has developed apace this week. Now, Jay Powell says inequality issues should be dealt with by politicians, not by the Fed. Up next, we look at America's income inequality and how the pandemic has widened the gap. We'll get some further analysis on that next. This is Bloomberg. welcome back to the European Market Open. 30 minutes into a trading session that at the overall level doesn't look all that interesting, down by 0.1%. But we've got some real movement coming through in London, down 0.4% on the FTSE 100. Also on the IBEX over in Spain, where we're down by 0.8%. Despite talk of Spanish bank M&A, we've got Bankia down by 1.5% in that particular market. Let's get through some of the sector moves then and see if we can tease out a little bit of what is weighing down on London. I can tell you the basic resources is actually the biggest gaining sector for European equity markets, up by 1.1%, but that is not enough, it seems, to offset the downdraft that we seem to be getting from some other big heavyweights, heavy cap names in London. The banking sector moving a little bit to the downside, and some of the bank names, some of the oil names, sorry, also moving lower. Let's get a Bloomberg First Word News update for you. Here's Laura Wright.
Thanks, Anna. ByteDance and Oracle appear to be edging closer to a TikTok deal. Sources tell Bloomberg they've tentatively agreed new terms with the Treasury Department. ByteDance is also increasingly confident the planned alliance will win the approval of regulators in Beijing. Assuming it happens, the new firm would aim to hold an IPO in about a year. Saudi Arabia has showed its determination to protect the oil recovery. It's warning short sellers not to challenge its resolve. Saudi Energy Minister Abdulaziz bin Salman also delivered a rare public rebuke to a close ally that had been overproducing. The UAE has made just 10% of its pledged cuts in August. Global coronavirus infections have topped 30 million. The US, India and Brazil are still the countries with the highest number of cases. The World Health Organization is warning of a resurgence in Europe, calling the recent rise a wake-up call. France has reported the most new daily cases since the end of the country's lockdown in May. The world's largest futures exchange, CME, is launching contracts based on California's water supply, the first security of its kind in the US. Water supplies have been tight in the state for years, and large parts of Asia and Africa also have potential problems. CME says it's almost 2/3 of the world's population could face water shortages by 2025. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thanks very much. Laura Wright in London. Now, central banks in Brazil, India and other emerging nations are all stuck on hold, with rising inflation limiting their options as energy prices have rebounded and emerging market currencies have weakened. And our guest says this is causing a divergence in inflation dynamics between advanced and emerging economies. Let's discuss now with Caroline Grady, Macro Hive economist and former senior emerging markets economist at Deutsche Bank. Very good to have you with us, Caroline. So what is it that these emerging markets have in common at this point? We can talk about the differences and put them in the same basket when we talk about inflation.
Sure. Well, we've been looking at the pockets of inflationary pressures that are starting to appear across emerging markets. And it's not uniform, but there's quite a few countries. It's Mexico, it's India, it's Russia, Poland to some extent, and you have still high inflation in Turkey. And this has been a sort of pronounced uptrend over the past several months. And the reasons for this is the recovery in energy prices that we've seen, still elevated food price inflation, and the pass-through from earlier FX weakness, if you think back to the big moves in sort of March and going into Q2. And also we have ongoing supply bottlenecks in these countries. So they're the key factors pushing up inflation in the emerging market space.
Yeah, I guess the time horizon must be important here when we talk about what's driving inflation, Caroline, because if I think about oil prices, they fell incredibly from the highs pre-pandemic and then went negative. And yes, they've rebounded, but we're still only at $40 or so. So is that really the driver for emerging markets, or is it other factors?
I mean, food is the bigger driver than energy, and also because the food price weight in emerging market inflation baskets is much higher generally than it is in advanced economies. I mean, in India, you're talking 46% on food prices. In Mexico, it's more like 23%, but if you compare that to the euro area, you're somewhere around sort of 14%. So this rise in food prices has been a very big factor. I think more
so it's the food price story, food price story then we really need to watch. What about policy response then? Of course, if inflation is on the rise and your economy is struggling, this makes things difficult for any central bank. What course have you seen central banks taking through this? We've seen many central banks just deciding to stay on hold. Is that the most likely course of action?
Yeah, I mean, as you said, we've had several on hold this week. We had Brazil on hold after 9 consecutive rate cuts. We had South Africa on hold, whereas it was expected they would cut rates again. India in August was on hold. And I think one of the key issues for central banks right now is there's a lot of uncertainty around the inflation outlook. I mean, the Mexican central bank said very explicitly the balance of risk to inflation was uncertain. And that's a really unusual environment to be in. And so because of that, these central banks will be very cautious. They will want to make sure that inflation expectations are anchored. And so even if they think, well, we have these very large output gaps, weak demand will dampen inflation overall, they want to be very certain that that's the case. And you have seen a lot of front loading in rate cuts in emerging markets as well.
Do you think then that central banks in these regions, in these emerging markets, will need to be increasingly creative around policy? Some of them already are, using other levers to try and drive their economies rather than the rather blunt tool that is the interest rate.
I mean, emerging market central banks, they still have room to cut. You're not at the zero lower bound, with a few exceptions, versus the case in advanced economies. So certainly some of them have moved to QE this year. Poland is one example. But I think for the biggest economies, I mean, I think for now they will stick to interest rates as the main policy tool. But right now, I think you're going to see EM central banks on hold. They will take stock of recent developments and just take a very cautious approach.
Yeah. Caroline, thanks so much. Thanks for joining us. Caroline Grady, Macro Hive economist, 8:37 here in London. Let's take a look at America's income inequality now and how the pandemic has widened that gap. The OECD says that the US is the country with the biggest income disparity in the G7. This week, Fed Chair Jerome Powell said that inequality in the economy needs to be addressed by politicians and not the Fed.
Inequality, which I would point to, it's a multifaceted thing, but I would point to the relative stagnation of incomes for people at the lower end of the income spectrum and also lower mobility. So those are things that hold back our economy. They are. The thing is, we don't really have the tools to address those. When we lower the federal funds rate, that supports the economy across a broad range of people and activities, but we don't have the ability to target particular groups. Notwithstanding that, we do talk about it because these are important features of our economy, and I think those distributional issues are issues that are really for our elected officials.
Joining us now is Bloomberg Quick Take reporter Jennifer Sabasaja. Jen, good morning to you. So the pandemic clearly worsening what was already, by global standards, a wide gap between the richest and the poorest in the United States. How has the pandemic made things worse, though?
Yeah, good morning, Anna. We're 6 months into this pandemic now, and really, again, seeing just how much this pandemic has really exacerbated inequality along racial, economic, social, and gender lines. Our Bloomberg colleague actually spoke to a professor who dubbed it the K-shaped recovery, what we're seeing right now, in that there's stacked inequity on one side and stacked privilege on the other. So if we go back to the spring, at the height of the pandemic, the stimulus checks that went out and the extra $600 jobless benefits really helped ease the blow for many Americans who were facing unemployment and declining incomes. It also helped keep consumer spending up, right? Because people were staying home and spending more time shopping online. But when that assistance ran out back in July, we saw the country's lowest wage workers, many of them who were the hardest hit restaurant workers, in the hospitality industry, really become less optimistic about spending and cut back just because they couldn't afford it. While that was happening, at the same time, the wealthiest Americans who have been able to work from home throughout this pandemic have become even wealthier. A recent report that I was reading from a progressive think tank actually found that in the time period when 50 million Americans lost their jobs and incomes, the wealthiest Americans actually gained around $845 billion. And so, we're now hearing more and more proposals about just how we can crack down on the rich getting richer, with several wealth taxes. But as Chairman Powell said, this really comes down to policy, and lawmakers right now are still at a stalemate about what stimulus needs to happen in the next few weeks before the election.
Yeah, and Jerome Powell there was wanting to point out the things that Fed policy can't do in this area. But when you look at the impact that the pandemic has had on inequality, if you break that down by ethnicity along racial lines, then how do things look then?
Yeah, and so, this is another area where we're seeing a really stark divide. Minorities are already facing a higher risk of seriously falling ill from COVID-19, and they're also taking a disproportionate financial hit. A recent study actually found that some of the reported financial burdens minorities are facing are things like, having trouble making rent, mortgages, credit card payments, difficulties affording medical care and food, and even a depleting savings. And so there's also a poverty divide, right? What we're seeing. So with 18.8% of Black Americans living in poverty compared with 7.3% of non-Hispanic white people. And so, President Trump likes to tout his record with policies benefiting African Americans. He even did so earlier this week. But the gains made by African Americans in the labor market over the past decades have completely been wiped out during this pandemic. The Black unemployment rate is almost double that of white Americans right now. So, as this became a central focus in the Democratic primaries prior to the pandemic, it's certainly a major issue in the general election, and one that both President Trump and Democratic nominee Biden are going to have to address, especially given that more and more of the electorate are falling into these categories and really are at wit's end and need a little bit more assistance. Anna?
Jen, thank you very much. Thanks for joining us. Bloomberg Quick Take reporter Jennifer Sabasaja. Don't forget, you can catch Jen's weekly show, Your World, every Sunday. That is on Bloomberg Quick Take, YouTube, the Bloomberg Quick Take YouTube channel, at 6 p.m. London time. And join us for the Bloomberg Equality Summit. This year's virtual event is going to take place on September the 23rd. There'll be a series of, we will be getting deeper, basically, into this conversation. Welcome back to the European Market Open. 45 minutes into your trading session. European equity markets on the back foot, down 0.1%, 0.2% overall. It is the London market and the French market in particular that are under pressure this morning. Let's get a Bloomberg Business Flash. Here are today's top corporate stories with Laura Wright.
Thanks, Anna. LSE is in exclusive talks with Euronext over the sale of Borsa Italiana. According to the exchange, the deal also includes Italy's state-backed lender, CDP, and Intesa Sanpaolo. Italy has been working for months to bring its stock exchange back into Italian hands. The Federal Reserve is considering extending its cap on dividends and ban on buybacks at the biggest US banks. It will decide in the next 2 weeks if it will prolong the restrictions, which are set to lapse at the end of the third quarter. An extension would likely disappoint banks. JP Morgan has already indicated it might resume buybacks in the fourth quarter if it's allowed to. Goldman Sachs has become the latest bank to send home traders. Bloomberg sources say that's after at least one employee tested positive for coronavirus. The lender is moving forward with plans to start bringing staffers back into the office. It's telling some of them to prepare for week-in, week-out shifts starting in October. That's your Bloomberg Business Flash. Anna.
Thanks very much, Laura. Right now, after a big week for rate decisions across the world, today we'll get further details from the Bank of Russia. Bloomberg Economics says the central bank is likely to keep its interest rates on hold. Let's get the thoughts of Sophia Donets, Renaissance Capital Russia Director. Sophia, what do you expect to hear today in terms of the decision and any commentary?
Good morning. We expect the central bank to maintain the key rate on hold at 4.25. The cautious decision could be a product of the elevated volatility on the ruble market, which we saw recently, just because the ruble dynamics remains a sensitive factor for the central bank decisions. We believe as it both could affect inflation outlook and raise financial stability concerns. But whenever we see or not a cut today, we are concerned that the easing cycle is coming to an end, a long easing cycle that lasts for more than a year, and now it's take the rate to really the lowest historical level.
Yes, it's difficult because on the one hand, they want to stimulate the economy. On the other hand, they're dealing with higher inflation, Sophia, and some of that higher inflation has come because of the sanctions environment and the threat of further sanctions. What assessment do you make of that? Because if that weakens the ruble, that can push up inflation and then give the central bank in Russia more problems.
For now, we see that it's more or less a short-term story. So the sanction risk is something which is there for Russia for years, and in this sense, markets has adapted to this kind of uncertainty. But this time, I think that this uncertainty could be with us for a more prolonged period, for at least 2-3 months, given approaching U.S. elections. So, but after that, if we don't have any kind of a heavy sanctions, we expect to see a rally on the markets somewhere closer to the end of 2020, taking the ruble closer to what we see as a fair value, given the oil at close 40, the fair value could be at 73.5.
And Sophia, what about climate risks and the challenge of climate change, how an economy such as Russia handles the transition towards a green economy? JP Morgan is talking about this being an issue because in Russia maybe there is less fiscal space to support the economy through that transition.
I would say that there is still a room in fiscal position to adjust to this kind of a stimulus. So we're not talking about a huge expansion of fiscal deficit just because the fiscal position remains pretty robust for Russia, and there is a target to be back to in line with the fiscal rule by 2022. But this budget is already have some kinds of targets that include some ecological development and facing the new challenges from this side, just because it's a part of the national program, which is now planned for coming 5 years. It's something new, I would say, in the agenda for Russian government. It's only there for a couple of years, but I think it's a nice move.
Sophia, thanks very much for joining us. Sophia Donetz, Renaissance Capital's Russia Director, joining us there from Moscow. We are 50 minutes into your European trading session, and up next, when will markets price negative Fed rates? We will put that question to our Markets Live editor, Heather Burke. This is Bloomberg. Welcome back to European Market Open. European equity markets then just on the back foot, in particular in London and in Paris. The Xetra DAX a little more solid this morning. Let's get to the markets conversation with Markets Live editor Heather Burke. Heather, good morning. And I'll go to the question of the day because it's an interesting one, given how much we've heard from central banks this week. When will markets price negative Fed rates? And what are we asking here with this question? Are we asking whether the Fed is really going to go into negative interest rate territory, despite all of the criticism we've heard of the European and Japanese experiments stateside? What kind of answers are you getting?
Good morning, Anna. It's unlikely to happen anytime soon, is the short answer. While the Fed held interest rates near zero and said they would stay there probably through at least 2023, Fed Chairman Jay Powell basically has now put the onus on fiscal stimulus to step in. Powell and other Fed officials have said in recent weeks that the recovery is really dependent on the ability to better control the virus, and that more stimulus is needed to support jobs and incomes. And going back to Europe and Japan, the negative rates haven't been effective in spurring inflation, which is the main objective. So if the Fed and traders started looking at that as an example, it doesn't have a very good basis. And I think you'd really need to see a fresh wave of infections hit the U.S. economy hard enough before traders might even start pricing this in.
Yeah, Heather, talking about negative interest rates, though, makes me think about the Bank of England, because we did hear about that. Not that they're going to do it necessarily, but they're talking with regulators about how it would be implemented if they need to. It was interesting to watch the pound on the move through that news breaking, because the market reacted pretty negatively in terms of the pound. We went to a 128 handle, didn't we? But then that recovered. What do you think is driving UK assets, driving the pound at the moment?
There's two things going on. One, the increasing possible chance of a no-deal Brexit. This week, the UK government introduced a draft law that kind of tore up sections of the Brexit deal, and the EU's threatened to retaliate with legal action. While the European Commission president said she's convinced the deal is possible, that overhang is really weighing on assets. And also the prospect of a spike in unemployment when the job furloughs program ends in October. While retail sales today improved, there's a chance that they could dampen again should consumer spending tighten up with the end of the program.
Heather, thanks very much. Heather Burke from our Markets Live team, Markets Live editor, joining us there with the latest on the markets this morning. As we look at European equity markets down by just 0.25% this Friday, 56 minutes into our trading session. We're down quite significantly in London, down around 0.5%. I was saying it's some of the big oil and banking names. When they fall, sometimes it's hard for London to outperform. The CAC 40 also weaker. Also the IBEX down by 1.2%. I was just looking into what is on the back foot over in the Spanish market. Certainly seems to be some of the travel and leisure stocks that are under pressure, and the banking sector, despite the M&A story emanating out of Spain today. That is it for the European Open. Surveillance is up next. This is Bloomberg.
Game over. The Trump administration asks gaming companies to provide information about their data security involving China giant Tencent. Back to the kitchen table. Goldman Sachs is the latest bank to send some traders home after an employee tested positive in its Manhattan headquarters. Plus, an exclusive conversation with the chief executive of Nestle. He's Mark Schneider. That interview coming up. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. A lot going on in the markets. Of course, a lot of focus is on what we heard from the Bank of England yesterday and whether that will filter through longer term in terms of negative rates. Now, overall, the markets are focusing on that. They're focusing, of course, on some of the things that we saw this week, which is M&A. Stocks in general in Europe edging lower. Again, it seems to be that a lot of markets are in a holding pattern, waiting for new catalysts. Now, let's get straight to the Bloomberg First Word News. Here in London is also Leanne Garrett. Hi, Leanne.
Good morning, Francine. ByteDance and Oracle appear to be edging closer to a TikTok deal. Sources tell Bloomberg they've tentatively agreed new terms with the Treasury Department. ByteDance is also increasingly confident the planned alliance will win the approval of regulators over in Beijing. Assuming it happens, the new firm would aim to hold an IPO in about a year's time. Now, the EU's climate chief says rising demand for green bonds creates an opportunity for the bloc. It plans to start selling as much as 225 billion euros of the debt. That amount is almost the same as all the green securities sold globally last year, likely making the EU the largest issuer.
If you see organizations like BlackRock making this really enormous change into the green economy, if you see them all, waiting for us to come out with green bonds because they want to be part of that, I believe this is the moment to do this.
And significant hurdles still remain in securing a Brexit deal. But European Commission President Ursula von der Leyen has told the Financial Times she's convinced it is possible. The UK says the latest round of informal talks were useful and some limited progress was made. The aim still is to reach a deal by mid-October in time for it to be ratified by the end of the year. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. So how do you reshape the world's biggest food company? When my next guest joined Nestle, he already had a reputation as a deal maker. Since taking charge in 2017, the company has bought and sold more than 50 businesses, exiting slow-growing consumer products, including confectionery in the U.S. As part of its ambition to become a global leader in food allergy treatments, it also recently spent $2.6 billion buying a company that tackles peanut allergies. Well, joining us this morning for an exclusive conversation is Mark Schneider, Chief Executive of Nestle. Mark, we're so grateful for the time you're giving us, so thank you so much for joining us this morning. If you look at what we've been through, the pandemic and COVID-19, how does it change the relationship we have with our food? Does it make us want to buy healthier foods? And so what does that mean for Nestle going forward?
Good morning, and thanks for having me. A great opportunity to update each other on what's going on. So clearly, the face of this pandemic has been changing over time, and shopping habits have been changing with it. Initially, there was a lot of concern about just keeping pantries stocked, and we saw a lot of pantry loading as consumers just wanted to be sure that there's enough food supply during the lockdown. I think over time we saw people were gaining confidence that shelves remained stocked and that the supply chains in food and beverage were resilient. We also saw quite a bit of initial demand for comfort foods. Clearly, this was a very stressful spring and early summer for many of us, and so comfort food was in high demand. At the same time, and I think this is now the longer-term trend that's playing out, there's a renewed interest in health and a nutrition that advances health and strengthens the immune system. And I think this is here to stay, certainly throughout the later stages of this pandemic, and we believe also beyond that.
So, Mark Schneider, when you look at your unit, which is health and nutrition, how much can that grow? Is that going to be one of your best performing but also growing units in the next 5 years?
So our Nestle Health Science unit has been on a tear even before the pandemic. So a few years back, this was a 2 billion Swiss franc business. We expect to double this to about 4 billion by the end of next year. Very strong organic growth, especially in vitamins, minerals, and supplements. And then on top of that, I think very nice M&A opportunities that we utilized over time in the health-based nutrition area. And I think this acquisition of AMU and the tender offer here is just the latest step here in implementing that strategy. And so over time, yes, this is going to be one of our key growth drivers and something we're proud of.
And so if you look at personalized subscriptions in terms of vitamins and things like that, how much will that grow? And are you seeing much more demand for products like that online? And will that continue once the pandemic is more dealt with?
Yes, so this is a category that lends itself to online business opportunity, and we've seen online demand skyrocketing. This was already, a growing sector before the crisis, but it clearly skyrocketed during the crisis because it made shopping so convenient. On top of that, you're absolutely right. I think personalized vitamins, minerals, and supplements are going to be the next frontier. We have some very exciting offerings underway. So you're moving away from just straightforward supplements like what I call the vitamin alphabet, like A, B, C, or D, and you're actually going to specifically what a certain individual requires. So initially there's some testing, there's a questionnaire, and then based on that you get exactly the vitamins, minerals, and supplements that are made for you.
So as that business is growing, Mark Schneider, does it mean that you'll cut down on processed foods?
Well, processed food is one of these misunderstood terms. When you cook, you're also processing food. So processed food per se is not a good or bad thing. It depends on what you do to the food. And I think overall, there has been a trend and something that we've been quite active on to really be sure that our food gets processed in a way that preserves the good and healthy ingredients, and that we're also using what we call kitchen cupboard ingredients. And that means to really simplify the label and be sure that these are ingredients that you recognize, that are natural, and that have a strong health track record.
In the UK, for example, Mark Schneider, a lot of the focus from the government is really on fighting obesity. So that also includes, certain advertising things when it comes to high fat or high sugar contents. What does that mean for certain Nestle products in the UK? Will you have to change them? Or, what kind of conversations are you having with the UK government about it?
Yeah, so we've been working very closely with the UK government, and to me, transparency is step one. So we were all across Europe, including the UK, we were in the forefront when it comes to food labeling and absolute transparency in that regard. So people should be knowing exactly what they eat and what the ingredients are and what the calorie count is. And then, of course, we're also a leader when it comes to restrictions, when it comes to marketing to children. And overall, going forward, informed choices to me is key. When it comes to food and beverage, it's one thing to have a very healthy offering, and you can count on us to have that in our lineup. But then on top of that, clearly, indulgent products are here to stay. The important thing is that with portion sizes and with the information you're giving, you allow people to make an informed choice and also nudge people towards a more responsible use of the more indulgent products.
Mark Schneider, when you look at some of the trends that we've been talking about for the last 5 years, there was a concern that it was the, smaller local brands that could have gotten market share from companies such as Nestle and some of your rivals. Does the pandemic actually reverse that trend because you have much better distribution, because you're accessible in certain places and have also that online capacity?
So during the pandemic, one phenomenon we've seen globally is that with consumers, there is a renewed interest in large, trusted brands. And this is nothing new. I think this also happened in earlier crises. People want to go back to choices that they know, that they trust, and that they know inside out. And so this crisis is no different. We've seen the same in 2008, 2009. Before that, I think we already have been able to slow down the onslaught of small to mid-sized companies in our space simply by becoming more innovative. I think what happened here, when you look back at the last 5 years, smaller companies were taking share from us because they were faster in addressing consumer needs. We have stepped up significantly our own innovation pipeline, and time to market has been shortened dramatically. And so even before the pandemic, I think we were able to slow down the loss in market share to some of the small mid-sized players.
Mark Schneider, thank you so much, from Nestle. He's the chief executive. Of course, he stays with us. We'll have plenty more to talk about, including possible further disposals or M&A transactions. Coming up, we'll talk more about the future of the world's biggest food company with our exclusive interview with the Nestle chief executive. That's next, and this is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, still with us, Mark Schneider from Nestle. Mark, thank you so much for sticking around. We were talking a bit before about some of the shift to more health and consumer habits. Today is also, I wasn't aware, but Nestle kind of reminded me this morning with a press release. It's U.S. National Cheeseburger Day, and you launched a plant-based cheeseburger. If we speak to you again in 5 years, how much of your revenue will be from plant-based foods?
We have not given precise revenue guidance, but we clearly indicated that this is an area that is strongly growing, strong, significant double-digit growth rates for several years now. I think this whole notion of plant-based alternative to meat and poultry and dairy and fish products, that has a huge runway ahead of itself. I think it addresses two key themes. One is consumers' interest in healthier diets, and at the same time, of course, environmental concerns, because the environmental footprint, and especially the carbon footprint of plant-based offerings, is so much better.
We talked also, Mark, a little bit before about the high sugar content products that the industry has. What will happen to your confectionery unit? Do you think it still has a place for Nestle, or will it be completely overhauled or reduced in the next couple of years?
We believe in the future promise of our confectionery business, and I think we've taken great strides in improving that. Having said that, even though it's confectionery, you can add healthier offerings, like, for example, our Yes snacking bars. And you can also go towards more premium offerings in smaller portion sizes. So I think there's growth opportunities. I mean, clearly, confectionery and chocolate, they address sort of a deep human need, and they're going to be here to stay. It's more about, having a responsible offering in that space, and I think we've made very good progress.
There has been concern in the past about, some of the coffees and cocoa beans actually being harvested by children. I know you've taken steps to try and change that, or at least, for some of your offerings. Does that have an impact on consumers? Do consumers now want to make sure where these things are sourced so that, no harm is done to any child?
Look, this is a huge issue, and let me be very clear. Child labor has no space in our supply chain, and this is an area that we're deeply concerned about. I think consumers' interest in this area is absolutely justified, and we are all in favor of full transparency. I think we've taken great steps in our supply chains, both in cocoa and coffee, but also in some other commodities, to be sure that child labor is not in those supply chains. Having said that, for all the controls we're doing, violations will continue to occur. It's all about how vigilant you are about those and how stringent you are in your response about it. But we're totally unequivocal. This has no place in our supply chain.
Mark, talk to me a little bit about some of the trade tensions out there. We could talk about Brexit. We could talk about the U.S.-China trade tensions. Does it actually change your supply chains? Are you taking steps in case the UK leaves the EU without a deal come December?
So specifically when it comes to the end of the year, we recognize we have a primary responsibility to the UK consumer. As a result of that, of course, we are increasing our stock levels to be sure that even if it's a choppy departure of that, we leave clearly the consumer well supplied and, that shelves are stocked. That's a very important theme for us. Generally around the world, I think with some of these trade tensions and some of the geopolitical developments going on, you will see over time a slight shortening of the supply chains. I think long, complicated global supply chains are getting increasingly exposed. As it happened with Nestle, at a time when these long, complicated supply chains were very much in fashion and all the rage, we never went all the way. So to this day, we operate more than 400 manufacturing facilities around the globe, and we're taking pride in actually having a strong local commitment and mostly making products wherever we can in the markets where we sell. And so as a result of that, we feel somewhat less exposed. But even with the setup we have, we need to carefully check that we're not getting exposed here as either the pandemic or some geopolitical developments put pressure on us.
What can you tell us about climate change? I know, again, there are efforts which will probably have to be redoubled and even more in combating, climate change and making sure that a lot of the packaging is sustainable. What are you most excited about in terms of packaging that can actually, be recycled more or biodegradable?
I think at this early stage, it's important to leave no stone unturned. So whether it's biodegradable, paper-based products, or whether it's the advancement of recycling or reuse systems, for that matter, that avoid waste to begin with, we have to try everything. There is not one silver bullet, and I think what you're going to be seeing a few years from now is not one-size-fits-all solution, but rather something that is tailored to specific markets and climates. So, for example, in a hot and humid climate, or when you have long distances, reuse systems may be harder to install. This is where the hygiene that comes from packaging actually does help with food safety. In some other markets where there's more population density and where the climate is more moderate, I think reuse systems will have an important role to play. And so what we're working on with our Institute of Packaging Sciences, and by the way, we're the only food company that runs an Institute of Packaging Sciences, we're trying to find the right solution for the right environment and then offer consumers a choice.
Mark Schneider, thank you so much for the time you gave us today. He is, of course, the chief executive of Nestle, and we hope to see you very soon. Now, coming up, game over. Well, the Trump administration asks gaming companies to provide information about their data security involving China giant Tencent. We'll talk a lot more about that next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get the latest on the U.S.-China tensions over technology. Bloomberg understands that Washington has asked gaming companies linked to Chinese tech giant Tencent to provide information about their data security. Now this comes as TikTok owner ByteDance is getting more confident its deal with Oracle will get the approval of Chinese regulators. Let's speak to our senior international editor, Jody Schneider. Jody, why is the Trump administration asking gaming companies to provide information about their data security involving Tencent?
Well, they're looking into this on so-called national security concerns. This is the Committee on Foreign Investment in the U.S., which investigates foreign acquisitions of American businesses for national security risks. and has the authority to examine acquisitions as well as non-controlling investments and recommend that the president block or unwind deals. And this builds on the Trump administration's heightened security of Chinese companies and their ties to U.S. firms. Tencent, which is the world's largest gaming company, owns Los Angeles-based Riot and has a 40% stake in Epic, which is the maker of the popular video game Fortnite. Both of those companies have been asked to provide this information about their security protocols and handling Americans' personal data. So it looks like this is based on that, whether there's any data that's being compromised. And this, of course, comes as President Trump is using this and his increasingly tense rhetoric about China as part of his reelection campaign.
Jody, what's the latest with the Oracle TikTok deal?
So this new company that TikTok's owner ByteDance plans to form with Oracle, first of all, apparently intends to hold an initial public offering in about a year. We heard that from Treasury Secretary Steven Mnuchin. It would be called TikTok Global, and the result of this transaction, forced by President Trump last month. We're also hearing that ByteDance is getting more confident that this alliance with Oracle will pass muster with China's regulators. So China has asserted its right to block the deal if it doesn't like it. The U.S. has said that it needs to really get past their national security concerns, and then you would have regulatory concerns as well. But this looks like at this point that it is kind of heading at least somewhat toward the finish line, that
Jody,
the Chinese regulators will sign off.
Jody Schneider, thank you so much. Now coming up, we'll focus more on central banks. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Saudi Arabia is showing its determination to protect the oil recovery. It's warning short sellers not to challenge its resolve. Saudi Energy Minister Abdulaziz bin Salman also delivered a rare rebuke to a close ally that had been overproducing. The UAE has made just 10% of its pledged cuts in August. Now, global coronavirus infections have exceeded 30 million. The US, India and Brazil are still the countries with the highest number of cases. The World Health Organization is warning of a resurgence in Europe, calling the recent rise a wake-up call. France has reported the most new daily cases since the end of the country's lockdown, which was in May. And the world's largest futures exchange, CME, is launching contracts based on California's water supply, the first security of its kind over in the US. Water supplies have been tight in the state for years, and large parts of Asia and Africa also have potential problems. CME says almost two-thirds of the world's population could face water shortages by 2025. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, central banks have been in focus these past days, not least the Fed's Jay Powell. He signaled U.S. rates would stay near zero for at least 3 years. Here's a look at what he and some other from around the world have said this week.
Rates will remain highly accommodative until the economy is far along in its recovery, and that should be a very powerful statement in supporting economic activity.
Inflation is expected to be well contained over the medium term, remaining below but close to the midpoint in 2021 and 2022.
With inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time, and longer-term inflation expectations remain well anchored at 2%.
Japan's economy has started to pick up with economic activity resuming gradually, although it has remained in a severe situation due to the impact of the novel coronavirus at home and abroad.
We believe the strong policy guidance we are providing today will serve the economy well by promoting our goals through the many possible paths the recovery may take.
Well, that was the Fed Chair Jay Powell and other central bankers speaking this week. Well, joining us now is Mark Hafele. He's Global Chief Investment Officer at UBS Wealth Management. Mark, always great to speak to you. You make us smarter on the markets. When you look at some of the things that we heard from the Fed and the fact that the Fed has changed and given us actually more insight into how they look at inflation, but also given themselves more flexibility, how does that actually move asset classes?
Well, I think it's been a huge stimulus over the summer. And if you look out, this combination of central bank action and all the digital trends, they point to this new normal, which has really stimulated, new normal, which is digital and a lot more stimulus in the system, and that's fueled asset prices, in particular in the tech stocks. The next question is, when do we get a little more normal? When do people get to go back into restaurants and start flying on planes? And that's really what the market is going to be focused on this fall.
So, do we ever get back to what we were in 2019, or is it just going to be a gradually, more normal? And what kind of scarring does that do to the economies, and therefore what does it mean for central banks?
Well, we will get to a more normal state. It may take the adoption of a vaccine, but those things are on the horizon. Now, whether they're 1 quarter away, 2 quarters away, 3 quarters away, 4 quarters away, that's what people are wrestling with. I think some of the things that part of this the more normal is more normal political environment in the United States, better understanding of what is going on with the vaccine, and then some understanding of how the stimulus payments in various countries are going to play out.
Mark, where do you see the biggest opportunities? If you look at the rally and if you look at what's happening in tech, is it frothy? Is it overvalued? Or is there some room to run?
Well, over the near term, the valuations are pretty full, but it's certainly not a bubble. 25 times on a PE ratio with 17% growth is high, but it's around the range that tech has traded in. So I think having a little more optimistic picture that we're going to get more normal, I think we've started to see, and I think we're looking at opportunities for clients to take some rotation away from large cap tech, maybe move it to some other areas of tech that can see growth, whether it's the 5G build out in Asia, whether it's cybersecurity. That's one way to play it. Another is to look at the more cyclical stocks. The UK index is more cyclical, or mid caps in the United States, which haven't done as well.
Mark, are you expecting tensions to rise between the U.S. and China? I know in your monthly note, you basically say that because there's an appetite both from Democrats but also Republicans in the U.S., as we've seen with the Trump administration, you know, to keep the fire on China. Is there a worry that actually, you know, things will escalate and that will, you know, move the markets quite significantly?
Well, we're not anticipating an escalation of the trade war between now and the election. So economically, I think things are going to be relatively smooth there. China has rebounded extremely well from COVID. It is a true V-shaped recovery. As far as tensions go over time, they are high, and both administrations, whatever plays out, will try to make America's points known. They may do it in different ways. So that is going to be a constant that is with us through the election and into next year.
What happens if we don't get a vaccine, Mark? What exactly is priced into? Is a vaccine by the end of the year basically priced into the markets?
I don't think that a vaccine is fully priced in at this point. When we say we don't get a vaccine, I mean there are vaccines that are already deployed in China and to limited degree. So eventually we will get a vaccine. But I think what the tricky part here is this combination of what you mentioned at the beginning about the Fed, stimulus, and then when the vaccine comes, because it's very hard for the central banks to take additional actions now if a vaccine is announced very soon or further stimulus is taken very soon, because putting monetary policy in front of that with the lag effect could leave them in a worse position than if they had just waited a little longer. So I think that's why this period before we get the vaccine announced.
All right, I think we're just having a couple of connection issues with Mark Hafley, but hopefully we can get him back on the phone. He was talking there about what exactly was priced in and what happens if it doesn't, actually, if we don't get a vaccine in the next 12 to 18 months. Joining us there, Mark Hafley, Global Chief Investment Officer at UBS Wealth Management. Now, coming up, how has the pandemic affected the telecoms industry and what lessons have chief executives learned this year? We discuss that next with Patricia Abunai, the Chief Executive of Vodafone Ghana. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Goldman Sachs has become the latest bank to send traders back home. Bloomberg sources say that's after at least one employee tested positive for coronavirus. The lender is moving forward with plans to start bringing staffers back to the office. It's telling some of them to prepare for week-in, week-out shifts starting in October. Now, Apollo is exploring a takeover of German plastics maker Covestro. Sources have told Bloomberg the buyout firm has contacted the company in recent weeks. Covestro was spun out of drug maker Bayer in October 2015. Its market value is around 8.2 billion euros. We're told discussions are at an early stage, so no official comment as of yet. And LSE is in exclusive talks with Euronext over a sale of Borsa Italiana. According to the exchange, the deal also includes Italy's state-backed lender CDP and Intesa Sanpaolo. Italy has been working for months to bring its stock exchange back into Italian hands. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, global coronavirus cases topped 30 million, with the World Health Organization warning of a resurgence. Health experts believe the actual number of cases is much higher. So how has the pandemic affected the telecoms industries, and what lessons have chief executives learned this year? Well, joining us now is Patricia Abunai, the Chief Executive Officer of Vodafone Ghana. Patricia, thank you for joining us today on Bloomberg Surveillance. Let me actually start off with some of the things that we're seeing in Ghana today. So we understand that your main competitor, MTN, was actually designated as a dominant player in June. What does that mean for Vodafone? What does it mean for your company? Can you significantly increase market share?
Well, for us, the law makes provision for the regulator to ensure a level playing field for all operators in the country. For us, it is important that there's equal space, there's no negative competition. I mean, we don't have any major objections as long as the actions that are taken by the regulator is helping the consumer, is stimulating innovation, and is creating creativity in the industry. So we're very open to the decision.
Ghana's economy contracted because of the pandemic, but if you look at services from telecoms, they actually increased. How has the pandemic affected demand for your services?
Well, the first one has been the surge in data traffic. I mean, and the increased demand for network infrastructure and connectivity. We've seen traffic go up by about 50%, and so we've had to expand capacity to manage this as much as possible. Also focusing on critical mission systems like the health, like education, and making sure we can support a more safe, a more resilient, and more future-proof network. That's for us as important. I think the second one has been the acceleration in digital. So we have been on the journey to drive digital adoption, but today we have seen significant increase in opportunity for not just our businesses, but also for the small scale and medium enterprises. So we've had to increase more digital wallets, enable cashless payments, deliver financial services through the mobile money platform. And in Ghana alone, we've seen for our network, 40% increase in the mobile active customers, mobile money customers. So this is safer, it's secure, it's affordable, and it's the best way to send money, to make bill payments, to receive salaries, etc.
Has the pandemic actually changed priorities for government in terms of infrastructure spending in the telecom services industry?
I mean, this is significant. So what the government did immediately was to support the telecom industry with spectrum. But I think what is important is to close the consumer divide. As long as people continue to work from home, then there's a greater need for consumer broadband. And one of the things the government has announced is partner with the telcos and with the electricity company to provide access to fiber into communities, into schools as well.
When you look at Vodafone recently bringing Vodafone Ghana under the Vodacom umbrella, what does it mean actually for your operations in Ghana? Does it change the way you operate going forward?
Well, the shareholding hasn't changed. It's still with Vodafone Group shareholders. However, we have the relevance of Africa. We have the learnings from other Africa, the 7 other African markets under Vodacom. And so it's really about best practice sharing and also to create synergy. So we have systems that we could capitalize on and help our operations.
All right, thank you so much for joining us today. Patricia Abunai, the Chief Executive Officer of Vodafone Ghana. Now, Jay Powell says inequality issues should be dealt with by politicians, not the Fed. Up next, we look at America's income inequality and how the pandemic has widened the gap. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Inequality, which I would point to, it's a multifaceted thing, but I would point to the relative stagnation of incomes for people at the lower end of the income spectrum and also lower mobility. So those are things that hold back our economy. They are. The thing is, we don't really have the tools to address those. When we lower the federal funds rate, that supports the economy across a broad range of people and activities, but we don't have the ability to target particular groups. Notwithstanding that, we do talk about it because these are important features of our economy, and I think those distributional issues are issues that are really for our elected officials.
Well, that was the Fed Chair, Jerome Powell, saying that inequality in the economy needs to be addressed by politicians and not the Fed. So today, we're looking at income inequality in the U.S. And joining us now is our Bloomberg Quick Take reporter, Jennifer Zabzaja. Jen, how has the pandemic worsened income inequalities?
Yeah, good morning, Francine. We're 6 months into this pandemic and really seeing, how this pandemic has really exacerbated inequality, not just along racial lines, but also economic, social, and gender lines. We actually have a Bloomberg colleague who spoke to a professor who's calling it the K-shaped recovery, and that there's stacked inequity on one side and stacked privilege on the other. So back in the spring, of course, at the height of the pandemic, the stimulus checks that went out and the extra $600 a week jobless benefits really helped ease the blow for many Americans who had lost their jobs or who had declining incomes. And it also helped keep consumer spending up, right? Because people were spending more time shopping online at home. But when that assistance ran out back in July, we saw the country's lowest wage workers, many of them who were the hardest hit, out of jobs, really become less optimistic about their job prospects and about spending. While at the same time, you know, the wealthiest Americans who have been able to stay home and work from home throughout this pandemic have only become wealthier. I actually read a recent progressive think tank report that found that in the period when 50 million Americans lost their jobs, the wealthiest Americans actually gained around $845 billion. And so, you know, we're hearing more and more lawmakers bring up a wealth tax and some sort of proposal on a wealth tax. But ultimately, as Chairman Powell said, you know, this really comes down to policy, and lawmakers on Capitol Hill are still at a stalemate over what stimulus they will pass. So, you know, it remains to be seen over the next few weeks before they break before the election how they're going to aid all of these Americans who are still struggling.
Jennifer, when you break it down by race, it's also even more troubling.
Yeah, so in addition, you know, minorities, of course, are facing a higher risk of seriously falling ill from COVID-19, but Black and brown people are also taking a disproportionate financial hit throughout this pandemic. A recent study actually highlighted some of the most glaring financial burdens that minorities are facing, which includes, you know, trouble making rent, paying mortgages, credit card payments, difficulty affording even food, and depleting savings. And there's also a poverty divide. You know, 18.8% of Black Americans are reporting living in poverty compared to 7.3% of non-Hispanic white people. And, you know, so we hear President Trump often tout his record with policies benefiting African Americans. He even did so earlier this week during his town hall. But the gains made by African Americans in the past 10 years have really been wiped out during this pandemic. Now Black unemployment is almost double that of white Americans. And so as this became a central issue for the Democrats during the primaries, it's definitely going to be a central focus now in the general election. President Trump and Democratic nominee Biden will both likely have to address it, especially because more and more of the electorate are falling into these categories and really, like I was mentioning, are struggling and looking for answers. Francine?
Thank you so much. Our Bloomberg Quick Take reporter, Jennifer Zabazaja, there. Now, don't forget, you can catch her weekly show, Your World. That's every Sunday. And just head to Bloomberg Quick Take YouTube channel at 6 p.m. London time. Now, a key ally of German Chancellor Angela Merkel says we're unlikely to see any abrupt shift in policy, regardless of who wins the party's leadership race. Daniel Günther spoke exclusively to Bloomberg.
This will be a transition. It will, of course, bring changes to the party. People shape parties, but thanks to Angela Merkel, the CDU is so rooted in the middle that I have absolutely no doubt that in a time when Angela Merkel is no longer holding this responsibility, that the CDU will still be on this course. The message from Armin Laschet is correct, that the course is reaffirmed if in a state such as North Rhine-Westphalia, one is clearly in the strongest position. 36% is certainly not nothing. And this is a particularly good result in a local election where the splintering of parties is greater on various levels. This is an absolute affirmation of this political direction, and I think that we shouldn't doubt Armin Laschet's centrist line. So this is a confirmation of this political line and signals where Armin Laschet stands. This is not just a one-to-one continuation. He is a different sort of politician. He is much clearer than perhaps is the case under Angela Merkel. But from political positioning, where he would like to lead the CDU, he is, without a doubt, the person who stands most clearly for the political center.
Well, that was CDU's politician Danielle Gunter speaking exclusively to Bloomberg's Arnie Delfs. Now, Bloomberg surveillance continues in the next hour. Tom Keene joins me out of New York, and then a little bit later, don't miss our conversation with the Atlanta Fed President, Raphael Bostic. In the meantime, this is what stocks are doing. They're edging lower here in Europe. U.S. futures are so a little bit mixed. Now, this is as investors are settling, according to a couple of market analysts, into a holding pattern. They're waiting for a catalyst, so it could be either technology or US-China or something with Brexit. Treasuries pretty much steady. The dollar also little changed after the gyrations that we saw on Thursday. Now, if you look at some of the things that are moving here in Europe, I'm looking at the industries. Cyclical industries, including travel and real estate, are actually the biggest fallers. And then we have a pretty big day when it comes to some of the banks. Caixa Bank to buy Bankia, that's been approved, and that will create the Spanish or the Spain's biggest lender. Some of the other things I'm watching out for, of course, is gold. Gold climbing. Crude oil trading higher above $41 a barrel and is up some 10% this week. We'll have plenty more surveillance coming your way. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. Game over? Well, the Trump administration asks gaming companies to provide information about their data security involving China giant Tencent.
Back to the kitchen table. Goldman Sachs is the latest bank to send some traders home after an employee tested positive in its Manhattan HQ. And cable holds at 129. Ursula von der Leyen still believes a Brexit trade deal is possible. The UK also sounds a note of optimism. Well, good morning, everyone. This is Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keene in New York. Tom, if you look at the markets, they're kind of trading sideways. A lot of people are saying they're expecting for some kind of catalyst, and that could come on the political front because we have quite a lot going on between U.S. and China.
Well, there's no question about the politics, and yes, U.S. and China, but there's also some great research being written off of the Fed meetings, and I would really go, Francine, to a brilliant note this morning by Kit Jukes, who sets up the British distinction, and he says, you know what, this isn't Europe. It really, really important. He talks about the current account surpluses in Europe, and Francine, his outcome of weaker sterling is stunning into the fourth quarter of this year.
Yeah, we'll have plenty on that smart note from Kit Jukes. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, the Chinese owner of TikTok is gaining confidence that Beijing will okay its proposed alliance with Oracle. China has asserted its right to block the sale of critical technologies. But Bloomberg's learned it's likely to greenlight the deal as long as it doesn't involve the transfer of artificial intelligence algorithms. President Trump is ridiculing FBI Chief Christopher Wray. Wray told Congress that Russia is trying to hurt Joe Biden's presidential chances through social media and influence operations. The president tweeted, quote, "Chris, you don't see any activity from China, even though it is a far greater threat than Russia, Russia, Russia." And makers of the leading coronavirus vaccine candidates are making their trial plans public. The move by Moderna and Pfizer come after increasing fears that the effort to develop a vaccine is becoming politicized. The drug makers are disclosing information about late-stage trials and how they plan to gauge their shots' safety and effectiveness. The British government says a round of informal trade talks with the European Union were useful. Meanwhile, European Commission President Ursula von der Leyen tells the Financial Times she's convinced a Brexit deal is possible. All that's a contrast to Prime Minister Boris Johnson's actions in recent days. He wants to tear up sections of the deal he reached less than a year ago. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Thanks so much, Ritika. Equities, bonds, currencies, commodities. Francine is dead on about a stasis in the bond market. It is absolutely remarkable. 0.68% on the 10-year yield. I didn't even quote it out this morning on the boards on television. Futures -3. NASDAQ a little bit green on the screen. Call it a red and green market right now. The VIX 26.49. Currencies, dollar churning here, weaker. I'm struggling here, Francine. Help me. 129.79 on sterling.
Yeah, I'm struggling too, Tom, just because it's in a holding pattern. And, I think markets are probably awaiting some catalysts. I know here in Europe, travel and leisure shares are leading the declines. If you look at UK pub and restaurant stocks, are also falling amid reports that Brexit, or actually Britain, may extend curbs after clamping down on social gatherings of more than 6 people. And just because we had the Bank of England yesterday, I also wanted to show you sterling. You can see a pound at 129.80. Now, joining us to talk about all things currencies, we're joined by Jane Foley, Rabobank Head of FX Strategy. Jane, great to have you on the program. When you look at pound, what happens to pound from now until December?
Oh, I still think that sterling is still really very vulnerable. Yes, we've had good news overnight that Ursula von der Leyen does think that a deal is still possible. And it's good to see these high-level politicians do weighing in because that gives a little bit of confidence. But you know what? Even if there is some sort of a deal, you've got to question whether or not there is enough time to get a comprehensive deal. And it is quite likely that we will have perhaps some sort of deal, but one that's full of holes, one that the market will certainly pick holes on. And certainly for some businesses that there could be disappointment. So I think even if there was a little bit of a relief rally on a deal, I think it could be limited. So sterling vulnerable, still vulnerable in case there is no deal, and vulnerable also that the economic impact of, say, a no deal or a poor Brexit deal really could suggest that this negative rate story is potentially alive and kicking in the UK as well.
Jane, we'll get back to also, the benefits or not, in this case, in negative rates. But we're just getting some breaking news out of the EU. Now, we understand that bank regulators are moving closer to actually ending a ban on dividend next year. So this is a Bloomberg story saying that several ECB supervisory board members see a harm if they extend this ban on dividends, and so that they would be in favor of lifting the ban. Now, it's unclear, Jane, at the moment whether this is because they think that there's more stability in the financial markets, or whether they think it would just be too harmful to extend it. But is there any read across on your world of foreign exchange? If they don't extend the ban, does it mean that they feel a bit more comfortable about the stability of the system as a whole?
Yeah, probably. And of course, we've got to remember that we have had some better economic data, during the course of this year than was anticipated in May. Now, that's a theme that we saw in the ECB meeting last week. They revised up the growth for this year. We also saw it in the Fed. We saw it in the Bank of England. We saw it in the Bank of New Zealand this week as well. So we've had better data for this week. Of course, what central banks have, amongst the rest of us, had to recognize is that we're going to have to live with the impact of this virus perhaps for longer than we thought in May. So perhaps some border control still for some countries, a slowdown of trade, as we all begin to realize that social distancing is probably in some form with us for longer, if there isn't going to be a virus for all, for some years yet.
Yeah, I look, Jane, at this, and I want to go to Kit Jukes' note, which I think you agree with strongly, and I want to go to the massive distinction into Q4 in 2021, which is capital flows and trade flows. So much of Europe has trade surplus, something foreign to Americans, and frankly, a troubled United Kingdom. United Kingdom, if they go to the zero bound or go to negative rates, they're not Europe, are they?
They're definitely not. And of course, the UK has this very significant current account deficit. And I often, explain to people that the real way of looking at a current account deficit is consider it to be a deficit of savers. And we need, therefore, international savers to come in and plug that gap. And international savers will come in if they like the fundamentals, if they like what they see. But if you look in the last few years, at, for instance, investment into the UK as a percentage of GDP, a few years ago, it was doing quite well, but recently, in the last few years, it's dropped below France, it's dropped below Germany, and that suggests that investors aren't liking what they see, i.e. there's too much political uncertainty. And if we continue to have uncertainty, investment flows, won't be as strong as perhaps they otherwise could be, and that potentially means a downward adjustment in the value of sterling.
Is it an adjustment that is gradual, or do we risk a jump condition off news flow or off trade flows?
I think we could certainly have some really jumpy movements in sterling. I think we've seen that all the way through this Brexit process. Often we get headline news and the market reacts. And now some of this, you could argue, is in the price. The fact that we're talking about this now means that perhaps there won't be such a big shock if we get some negative headlines on this further down the line. But I do still think that sterling volatility could really be quite heightened over the next, certainly over the next 3 to 6 months, possibly over the next year too, because there will be fallout. If Brexit doesn't go particularly smoothly, there will be fallout on the Johnson government, and he has been firefighting all of this year in terms of his reactions to the COVID-19, in terms of reactions to recently, of course, to his latest internals markets bill. So he's been firefighting for a long time. If he carries on firefighting for the next 3 to 6 months, we could have a very difficult government scenario, and sterling will react to that too.
Jane, if the BOE does go into negative rates, what exactly would be the fallout for pound and other currencies?
Well, again, for sterling, it would be negative. Now, this has been something which the market's been talking about these last few months. There are, of course, other countries that have negative interest rates. Japan, Switzerland, some other, the Eurozone, some other Europeans have had them as well. But generally, these have, I think, all of these countries have current account surpluses, so it would be fairly unique for the UK, and therefore you could argue that sterling could be more exposed. Now, there will be levels that some investors think, UK assets are looking pretty cheap. They've been saying that about the FTSE for a while, but still the FTSE continues to underperform because those uncertainties are still outweighing that cheapness, meaning that there's still potential downside behaviour, I think, for sterling.
We're going to look at some pairs here with Jane Foley on a Friday. This is a brilliant conversation to get started. I really can't convey, folks, the unusual outcome of the week after the Powell presser, the various shocks out of that, including Mike McKee's important question, the tumult and the quiet that we observe in the bond market. And of course, how it folds over to where we are on DXY, Eurodollar 118.57. The conversation will be advanced. Coming up on Bloomberg Surveillance, the Atlanta Fed president, always interesting with a distinctive view of the commerce of this pandemic. Raphael Bostic in the 8:30 time slot. It's an interesting Friday. This is Bloomberg.
We never thought COVID-19 is going to hit us, but now looking back, I don't know how we could cope without this new sector.
Hong Kong is not by itself a big market, but because of the growth GBA, there's huge opportunity. So we're seeing a huge wave of biotech innovation coming in the past few years.
Almost kind of certain that at the very beginning of our journey to pursue the biotech listings, we'll see a lot of the Chinese companies.
This is just the right thing to do at the right time, and it's such a big sector.
We have second product for approval, and now are actively preparing for the commercialization. And we're expecting to have 2 more products to be approval before end of the year. So we have a high confidence that we will meet the expectation.
Bloomberg Surveillance. Good morning, everyone. A most interesting Friday into your reading for the weekend to get ready for, can I dare say it already? October. Francine Lacroix and I rushing the season forward here. Really extraordinary. Got a great guest coming up. Rebecca Patterson will be with us. She works with a guy named Bob Prince at Bridgewater Associates. Really looking forward to speaking to Ms. Patterson about risk parity and its challenges. Right now, we take a risk with Jane Foley of Rabobank. Jane, the big mystery is why yen hasn't moved. Let's start with it. We've got a new prime minister, but we've also got a yen stuck in the water at 104 as many people make a big figure call for strong yen. Why hasn't yen moved, and what's its signal?
Well, I think it is quite interesting that we are below that 105 level, but I think also we've got to recognise that a lot of that move is dollar weakness at this point. But I think the yen really could be an interesting currency from here on in. Now we've got a new Japanese prime minister. The market's assuming, that he will follow in the guidelines of Abe, and he was his right hand man all the way through Abe's second term. But we've got to remember also that the new prime minister doesn't have the experience of foreign policy, and this is going to be where I think the yen and certainly where a lot of the geopolitics is going to be interesting over the next few months, if not the next few years.
But Jay, not to interrupt, but this is important. The intuitive feel is if the prime minister's not up to it, the yen should weaken. But that's not what happens, right?
No, well, the yen is a safe haven. So on any sort of form of uncertainty, even if it relates to Japan, then the yen will strengthen. A true safe haven, that's what it does. If you refer to 2011, that awful circumstances when Japan suffered that nuclear disaster, the tsunami, etc., what happened? Well, the yen strengthened. And this is what a real safe haven does do, irrespective of, why the news is looking bad, it will strengthen. So if we look at the foreign policy, yes, Suga is inexperienced, but, hopefully he will get up to speed pretty quickly, and I think he's going to need to, because if we look at the China tensions, we've got to recognize that this isn't about just US-China tensions. We have a lot of activity, a lot of pushing back about China's activity in the South China Sea. Today, again, we had another headline about China's military showing in the Taiwan Straits. That's going to be a news headline. We've had all of the Five Eyes pulling back from Hawaii. We've got concerns that maybe Germany, maybe Japan should join those Five Eyes states in watching and sharing information about China. A lot of Australian news about tensions with China over the last couple of years, particularly this year. So there is going to be a lot of foreign policy issues. Abe on Friday left a final blow, which is a bill so that Japan could potentially extend its pacifist constitution, or a rereading of the pacifist constitution, and get some land missiles on board as well. This is all really interesting, and this is all about China. So if we have concerns on this front, if we have concerns even about the US and a contested election, we can expect that the yen will gain.
Jane, talk to us a little bit about some of the other, safe havens. What do you do with Swiss franc right now?
Well, the Swiss franc, again, pretty interesting, because the Swiss franc, yes, it is a proper safe haven, but it tends to be more reactive to, say, European news than you would have, say, the yen, which can be really quite sensitive to Asian quite news. And that's sort of quite natural if you consider where possibly investors are based. But dollar Swiss, I think, really has been sort of thwarting normal movements, or what I would expect to see normally in Euro Swiss. I think Euro Swiss could have gone up a lot higher after May, after we had that recovery fund in Europe, but it couldn't, because of the big movements in the dollar and that pressure that we were coming through from on dollar Swiss. So dollar weakness, that is a real factor, sort of slipping through, if you like, onto the impact on the Swiss franc.
Thank you so much, Jane Foley there, Rabobank Head of FX Strategy. Now, coming up on Balance of Power, the former U.S. Treasury Secretary, Hank Paulson, he'll talk about stimulus, he'll talk about dollar. That's coming up at 12:30 p.m. in New York. That's 5:30 p.m. in London, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. In Spain, a takeover will create the country's largest bank. CaixaBank is buying Bankia in an all-share deal that values the state-controlled lender at about $4.5 billion. Signs that the long-awaited financial industry consolidation in Europe is starting to kick off. And Facebook is again being sued for allegedly spying on Instagram users. This time it has to do with the unauthorized use of their mobile phone cameras. In July, there were media reports that the photo-sharing app appears to be accessing iPhone cameras even when they weren't actively being used. Facebook has denied the reports and blamed a bug which it said it was fixing. The Trump administration wants information from gaming companies about data security linked to China's Tencent. Bloomberg's learned that the Committee on Foreign Investment in the U.S. has sent letters to companies such as Epic Games and Riot Games. They want to know about their protocols in handling Americans' personal data. Tencent owns Riot and has a stake in Epic. That is your latest Bloomberg Business Flash. I'm Francine.
Thank you so much, Ritika. Now joining us is our Asia Tech Executive Editor, Peter Elstrom, to talk about TikTok, but also to talk about the new scrutiny from the U.S. on Tencent. Peter, great to have you on the program. First of all, is there a concern that as the U.S. investigates more Tencent, they could announce something like they've done with TikTok, or are we really far behind that?
Well, already Tencent is in the sights of the Trump administration. The Trump administration has come out with this ban on WeChat, the messaging app that Tencent owns. Now they're taking a step further, and they're beginning to ask these game companies about how they treat the data that their users are generating. Tencent has been investing in companies around the world, particularly in games, for a very long time. And as mentioned, they have stakes in some pretty big gaming companies around the world with many users, including Epic, the studio behind Fortnite, and also Riot Games, which has League of Legends. So the administration wants to understand how that data is being used, and at the most extreme, they may push for Tencent to divest some of these stakes that they have in these companies.
Peter Elstrom, you have the all-time great Midwest pedigree of Northwestern and Chicago economics. Is this capitalism? I mean, I know you weren't taught this stuff at Chicago, but the bottom line to me is it's absolutely original corporate dominance by political parties. Is this going to have legs to it? Is this going to continue and move into the future as Trump wants it?
Well, this is certainly not the free trade philosophy that you would hear in business school. Trump has taken a different tact, as you've seen. Probably most pointedly, we're seeing it with TikTok right now, where they're kind of forcing the parent company, ByteDance, to give up control over TikTok, which has been this huge hit app. It's challenging Facebook and Google in terms of online advertising. That deal is right now under review by the Trump administration. It's not clear whether they're going to sign off. It sounds like there are different factions within the Trump administration with different points of view. Some are ready to proceed under the proposal that would spin out TikTok Global and have Oracle and the venture capital firms take a stake in it. But there's another faction that wants ByteDance to give up majority control over TikTok Global. And it's not clear which faction is going to win out. Trump still has to make this decision, and then it goes to Beijing for review.
Peter, do you think that this TikTok sale will actually have the confidence of Beijing? Would they be okay with it?
Yeah, we put out a story today based on sources that ByteDance is getting increasingly confident that they will be able to get the blessing of Beijing for this deal. It was pretty clear from the beginning that Beijing would be okay if ByteDance is holding on to the technology behind TikTok and maintaining majority control over the TikTok business. The key question was whether Beijing would also be okay if ByteDance had a minority instead of a majority in TikTok. And according to our sources, they're pretty confident that that would be okay as long as they kept tight control over the technologies that are used in the TikTok app.
Why should the President of the United States agree to what you just said?
Well, the case that the factions have been making inside the White House is that ByteDance is giving up a substantial chunk of equity in TikTok Global. The company has said that they will move the headquarters of the operation to the United States. They're going to generate 20,000 jobs. They're going to make substantial investments. And they've also put together a very detailed plan about how they're going to treat the data that's generated from TikTok. It's a 20-page document. There's also going to be data security experts who review this, and CFIUS will be able to check on it anytime that they want.
Peter, thanks for the update. Just brilliant. Peter Elstrom shepherding our technology coverage in Asia out of Tokyo as well. We'll drive forward the political conversation today. The Speaker of the House of Representatives will be joining David Weston on balance of power, an exceptionally strong effort by Mr. Weston today with Pelosi as well. I believe Henry Paulson scheduled today. But look for Nancy Pelosi in the 12 o'clock hour. This is Bloomberg Futures, red and green on the screen.
Particularly, sort of the technology landscape have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. Good morning, everyone. Tom and Francine from London and New York. Now, Tom, global coronavirus infections have topped 30 million, with the U.S., India, and Brazil recording the largest number of cases. Meanwhile, the World Health Organization says fresh outbreaks in Europe are a wake-up call for the continent. And a new book echoes that sentiment. Well, the authors write, the coronavirus has made government important again. This is a quote from the book. Not just powerful again, but also vital again. It matters enormously whether your country has a good health service and competent bureaucrats. The arrival of the virus was like an examination of state capacity. A handful of Western countries passed. Well, we're delighted to be joined by one of the authors of the book. He's our very own John Micklethwaite. He's co-author of this new book, The Wake-Up Call, Why the Pandemic Has Exposed the Weakness of the West and How to Fix It. And he's also the editor-in-chief of Bloomberg News. So, John, great to see you again, actually, and have you in the studio.
This is Tom. I'm delighted to be here. Apparently, I'm making history by being the first person to sit opposite you.
Yeah, it is.
My bottom is making history,
and
so that is an honor.
And John, when you look at, I mean, the book, first of all, it's great, it's short, and it's so topical that people can actually really get a sense of what they've lived through for the last 6 to 8 weeks. You kind of give everyone a marking, right? It seems that a lot of our Western societies just haven't done good enough. Why?
No, because you look at the numbers, and they're horrific from the point of view of the West, especially from the point of view of Britain and America. You know, in Britain, we're above 600 deaths per million. In America, it's getting very close to 600 deaths per million. Go down and you look at places like Germany, it's around about 100 deaths per million, and there are some other places in the West have done okay. You go out to Asia, and you find figures of 10, 11, 12 per million. South Korea, Japan, Thailand, Singapore, Taiwan, all those sort of countries have done really well. But the second rather frightening thing, I think, especially from an American point of view, is you look at China's numbers. Well, China claims a number of 3.3. We can all be a bit dubious about that. But that's still, even if you assume that they're hiding 90% of the deaths, which I'm not necessarily saying they are, but assume they are, they would still have a number of 30 deaths per million compared with America, close to 600. So this disease, which we all said, look, this could be China's Chernobyl, has ended up, I think, much more being the West's Waterloo. It's one of those things where if it really is that big a gap, then Asia is doing something better than we are.
John, what's great about the book is that you basically identify the problem, but then at the end, you know, towards the end, it's also like the solutions. This is what governments should do better and change. Is it just all about getting better quality people?
I think it's a mixture. I think it's a mixture between getting better quality people in. I mean, you look really at the elites. Go to Silicon Valley, go to Wall Street even. You don't find enough people going to think of working in the public sector. It's interesting, the places where government really works, Singapore is the obvious example. In Singapore, if you run the civil service, you get paid $1 million a year. On the other hand, if you're a bad teacher, you get sacked. And so if you look at it from an American point of view, the Republicans would never dream of paying somebody $1 million a year in the public sector, and that is foolish. You need to bring good people in. You're running off to huge organizations. On the other hand, the Democrats would never dream of sacking bad teachers. You take those two things together, and it makes a big difference if you can get good people in there. But it's partly that, and it's partly also to do with the kind of reforms you could bring in.
I get bad news, John. I actually have to give this book a rave review. I was sort of like, yeah, the editor-in-chief sounds, so what? Folks, The Wake-Up Call reminds me of Mazzucato in my book of the summer, Richard Haas of the World. John, this is a book that should be thrown at every smart-mouth undergraduate and say, shut up and read the history of Woolridge and Micklethwaite. I want you to start with Thomas Hobbes. You stagger through Hayek and the shift to the University of Chicago, and then you meld William Gladstone and Abraham Lincoln from the 19th century. You got to be kidding me. Where's William Lincoln out there? Where's Gladstone and Lincoln out there now?
Well, just explain all those names very quickly. First of all, thank you, Tom. I will, lunch is yours.
Lister still sucks, but continue.
On the rest of it, Thomas Hobbes is important because when he sat down to write Leviathan, the first book that the West really had from the West about the structure of government, which changed a huge number of things. Back then, the West was a bloody backwater. By contrast, China was the most powerful place in the world. It had massive economy, far more civil servants. It had everything, really. But the West came back because it adopted ideas like the ones you talked about. And when we talk about how to change government, we thought about what you could do if you used a kind of imaginary figure. So at one time we thought about maybe we take Angela Merkel, put her in the White House, see what happens. Actually, we thought it was more instructive to go back to the 19th century. And the reason why is the 19th century is the last period when there was massive reform of government. And so we chose Abraham Lincoln from America and William Gladstone from Britain, and we put them in, and they could be either a Democrat or a Republican.
John, I got to interrupt just because we have short time, even for a big shot like you. This is really important, folks, and my good friend David Gurr's father is the expert on this 19th century American transcendental view of the 19th century, and as John says, when government was reformed. Here's the fact, John. The President of the United States wants to take us back to a Hobbesian philosophy. That's a fact. How does whoever is after Trump, 2 terms out, or Biden, how do they begin to get us back to what Gladstone and Disraeli argued about?
I think you have to go back to basics to some extent. I think one interesting thing is that people on the Democrats particularly are looking at this election and thinking, well, all we need to do is change the leadership. And there are some things which I think it's fair to say Trump has not done particularly well in this. Doesn't play to his strengths, this sort of panic is, when you have to bring in experts, you have to organize things, those are not really his strengths. But the horrible truth, when you look at an American government, whatever happened, a healthcare system that is designed for the old and the rich, not the poor, was always going to be hit. Trump didn't start police causing violence in the streets. Wasn't under Trump that American schools began to fall way behind Asian countries. So whoever comes into American government, whether it's Trump again or it's Biden, they've got to seriously think about reforming things, because the lesson of history is really clear, as you know, particularly Tom. Empires that do not reform, you can have defeats, and America has been defeated on COVID by any measure. It's done so much worse than pretty much every other big country, except for Britain. It's how you react to that, which is what makes the difference. Some countries didn't. Athens years ago suffered from a plague and gave in to Sparta. Other countries, look at Spanish flu 100 years ago, countries actually reacted to that and it made a difference. It's really up to America whether it wants to reform. Because in the end, no matter how good your private sector is, and we celebrate that private sector repeatedly on Bloomberg, if you have a lousy public sector, it does not work.
But, John, are politicians, to reform you have to be self-aware of your shortcomings. Are politicians self-aware enough?
Are we all self-aware enough? We push that question to Tom Keene. I think the answer is no. I think too many politicians at the moment are too beholden to special interests. Again, you look at what's happening in Congress. You have Democrats who are unable really to think about reforming the public sector because they're so close to public sector unions. And I think on the Republican side, you have a real challenge. If you were somebody like William Gladstone or Abraham Lincoln arriving now, you would say, why is there $1.6 trillion worth of tax breaks, which almost exclusively go to the rich? If you believe in smaller, smarter government, you should get rid of those, you should bring down rates, and you should also look quite hard at entitlements. Why does Warren Buffett get a pension? Why does Bruce Springsteen get a pension? It cannot make sense in a new world where you want to redesign government to think about those sort of things. So I think there are challenges on both sides. I do think there is more action in America when it comes to people like mayors.
But this is why we have elections. Why do people not see it and vote people out if they don't have what they want?
I think people are beginning to see. I think the problem with the public sector against the private sector is in the private sector, if you fail compared with other companies, you have no choice. You have to either copy them or you go out of business. The idea that America is 30 times worse than its main competitor when it comes to dealing with disease, they should start looking and trying to learn what other countries do well. All the recommendations we make in this book are ones that people are already doing. So it's not as if we're shooting for the moon, they're things that people could do.
John Micklethwaite with us, folks. We celebrate the wake-up call. This is 156 pages. I'm not going to mince words. From the first paragraph, it is a walkthrough of the competing two forces of our world political economy. We're going to continue this dialogue with Mr. Micklethwaite. Right now in New York City on this Friday, our first word news, here's Ritika Gupta.
Hi, Tom, Francine. Congressional Democrats are weighing their next steps after President Trump backed a bigger stimulus plan. Some are keeping pressure on House Speaker Nancy Pelosi to bring a new coronavirus relief bill up for a vote. Pelosi says some lawmakers don't want to advance any legislation until they have an agreement with the Trump administration. President Trump announced $13 billion in new farm aid at a rally in Wisconsin. The move had been widely anticipated. Wisconsin is a farm state that's critical to the president's chances, after all. He's trailing in the polls there. And Joe Biden is drawing a sharp contrast between his middle-class upbringing and President Trump's wealth. The Democratic presidential candidate was making a plea to voters in the crucial state of Pennsylvania, where he was born. Biden returned to his hometown of Scranton for a CNN town hall meeting. He said he views the campaign as a campaign between Scranton and Park Avenue. And the Federal Reserve may extend the unprecedented constraints on bank dividend payments and share buybacks. The Fed says it will decide whether to prolong the limits in the next 2 weeks. It's now conducting stress tests. Regulators imposed the cap in June. At the time, the Fed said there were potential risks to banks if capital distributions continued at the same pace. Global news 24 hours a day on air and a Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thank you so much. Now make sure you catch the Bloomberg Green Festival. The week-long event gathers thinkers, scientists, and business practitioners for a virtual event focusing on core issues of climate change. Now, today's highlights include the Enel Group Chief Executive, Francesco Starace, the Cisco Chief People Officer, Francine Katsoudas. That starts at 8 a.m. in New York, 1 p.m. in London, and this is Bloomberg.
Everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Come on a Friday, a book you have to read. Bloomberg Surveillance, good morning. Francine Lacroix in London, I'm Tom Keene in New York. The wake-up call is 156 pages. It's about the size of a good martini cocktail coaster. You know, it's that coaster size, and it deserves to be read by you and any offspring board right now. John Micklethwaite, Adrian Wildridge, they've written before, and we're thrilled that the editor-in-chief of Bloomberg News could darken the door in London today. Okay, William Lincoln, I get it. How cute. Gladstone and Abraham Lincoln. I want to know where Ronald Clinton is, because the fact is Reagan ran to the middle and Clinton ran to the middle, particularly with welfare reform, to get things done. Can Biden run to the middle and survive, or is a new liberal theology so much, John, he can't do that?
Well, that's actually a good point. I mean, Bill Clinton did he did reform things, and you're right, the welfare reform that began in Minnesota, he picked it up. And there used to be a tradition in America where people picked up on reforms from the states, and that seems to have gone down. And that when you look for examples of things that are going better in America, you tend to look at the local level. You look at mayors who tend to be less partisan. By the time you get to Washington, it's so enwrapped in special interests, so enwrapped in all the problems of gerrymandering and all the things that naturally drag Washington politics to the extreme, and it's much harder. I do think that actually there is something about the idea that if you're Biden, you come in, he is going to have a debt to people who are very close to public sector unions, and virtually every kind of reform of the public sector, every reform of government has to involve change there. And so that is the challenge for him. If you want a term for how it might be for Biden, I would look towards yet another game for you, Tom, rugby. In rugby, you can have something called the hospital pass, which is when you're running along and I pass the ball to you, and you are so excited to receive the ball, you keep your eyes on the ball and you catch it finally, and you're wildly happy for about a millisecond before the opposition lands on you and flattens you. And I think Biden's slightly in that position. He's just concentrating on getting the presidency. When he actually inherits the American government and really becomes to terms with how far it's fallen behind other places, then I think it's a really, really difficult challenge if he wins. And, you know, Trump would face some of the same challenges as well.
John, it took us 3 years to teach cricket to Tom. I'm not sure we're ready for rugby, Tom. That was like your first lesson in rugby. And then, you know, we'll go on forth and learn more rules as we get on.
Guy Johnson gave up with me about 3 years ago on rugby. But John Mickeltate, what's so important here, witnessed, Corbyn is out, as you mentioned, in the wake-up call, and Labour goes to a more centered tendency with Mr. Starmer. Is that the great prediction of you and Adrian, that we will see the parties move to the middle, or do we stay with this polarity, keeping us away from our wake-up call?
Well, both sides face problems. I talked about the Democrats and the public sector unions. I think conservatism at the moment, something we wrote about in a previous book, is also under a lot of stress because conservatives were famous, especially in Britain and America, for several things. They were famous for being pragmatic. They were the people you trusted to look after the economy and trusted to look after your defense. Well, you see what's happened with the coronavirus with both Trump and Johnson, and there are substantial questions about that. But behind that as well, I think conservatism is in trouble. You've got one group of people who just talk about the need for ever smaller government. Well, if you want zero government, go to the Congo, or for that matter, actually go to New York when COVID was at its height, when public services were patently unable really to deal with the problem. So zero government is not the answer. The other part, the other strand of conservatism at the moment, which is very much what Trump has been pushing, is this self-sufficient, national greatness, America first version of conservatism. And that, I think, causes trouble, not just for the business groups who tend to like things like free trade, they tend to like things like immigration, where people to try and help, but it actually is a bigger problem, I think, when you look at the whole point of this, which is to compete with China. Well, if you believe in America first, you never get allies to come with you. You look back at the way America won the last Cold War. It did it by reaching out to allies, and it did it by singing a song of freedom. If you're not prepared to get on with allies and you don't talk about freedom, you always talk about America first, then that message doesn't resonate. And you look around the world, the democracies of the world are so much stronger than the autocracies, no matter that China has done this thing better than America. The rest of it, you know, the focus of the right should be how do you bring that together? And I think that's interesting. I think conservatism, you know, it's ruled the roost in both Britain and America for 50, 60 years. Only Barack Obama, Tony Blair, and Bill Clinton have managed to win the main offices. But now I think the right has real systemic trouble and problems.
John, do you really think the pandemic will be a reset? Because you could argue that, you know, the populists, let's talk about, you know, Boris Johnson or Donald Trump, actually offered some kind of new social contract, but it just wasn't with health. It was, you know, another type on trade.
Yes, I mean, there are bits of both sides. In every bit, there's some element of truth. I think Trump identified this problem of white working class who were being felt left out. He identified the challenge of China. Johnson has a group of people around him, like Dominic Cummings, who would, although he may not sympathize with some of the ways we describe him, you know, he looks at the issue of how to reform government. It's what drives him towards this idea that you could make London into Singapore on the Thames, you know, that you could actually begin to refashion government. So there are people in both places who are thinking about these things, but at this precise moment, the populists are the ones who, in some ways, been, you know, the water's gone out and they've been left unable really to explain what they did. This was a challenge which you needed someone who was pragmatic, who could pull in experts, who knew what to do. You look at the way that Angela Merkel has handled it. Again, you know, 6 times better in terms of the level of deaths in Germany compared with the level of deaths in Britain and America. That's a big difference, and her leadership did play a role in that.
John, on the UK, what's the implication, the wider implication of the UK and the Prime Minister now saying he's happy to break international law?
I think that's very difficult. I mean, what's interesting on that is that the way that even pro-Brexit Tories like Michael Howard have come forward saying, look, how can you possibly lecture places like China, places like Iran, and places like that, which Britain has always...
Okay, ladies and gentlemen, new order placed for Euro buy at 118.567. I'm placing a new order to buy at 118.567. Okay, let's see if we will be able to get it.
Real star power behind that, exposing the weakness of the West and how to fix it. Now, coming up on Bloomberg Markets, we speak with John Tuttle. He's the New York Stock Exchange Vice Chair and Chief Commercial Officer. We'll talk about some of the tensions out there between the U.S. and China, but also some of the bourses here in Europe. That's coming up at 10:30 a.m. in New York, 3:30 p.m. in London, and this is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
We open position for Euro at 118.567.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. Shares of Unity Software begun trading today. The San Francisco company priced its IPO above a marketed range to raise $1.3 billion. Unity has a market cap of $13.7 billion. It develops software used to design video games. A federal judge may put a temporary hold on President Trump's executive order that could ban Chinese-owned WeChat in the U.S. The judge says the president's order is too vague. WeChat is a messaging, social media, and electronic payment payment app used by more than 1 billion people. The US argues that China can use it to spread disinformation and steal data. And car makers in the European Union are crying foul. They've balked at the EU's plan to set stricter emissions limits for the next decade. The automakers say they lack the government support needed to achieve those targets. And that is your latest Bloomberg Business Flash. Tom, Francine.
Bernica, thanks so much. Now, the markets seem to be quite quiet. If you look, Tom, at what's happening in the European stocks, they're fluctuating pretty much. Now, there has been a bit of mixed signals from investors. They also seem to be settling into some kind of holding pattern while awaiting new catalysts. I'm looking at treasuries nudging higher, dollar edging lower. And then I did also want to show you some of the UK pub and restaurant stocks. They're falling because of reports that Britain may extend curbs after clamping down on social gatherings of more than 6 people, Tom.
It's incredible, and Pharaoh's been in every one of those pubs just in the last 10 days. On the data front, on a Friday, mixed market, red and green on the screen, as Francine mentions, VIX from that 28 level into 26.21. The disparity between NDX and SPX is really something. NASDAQ down about 12%, SPX down about 7%, Apple down 21%. I'll do that at the top of the next hour as well. And the dollar, it's a weaker dollar here, but as we had a good conversation with Jane Foley, yen 104.31. She's calling for stronger yen and particularly weaker pound sterling, sterling 129.86 as well. For Global Wall Street, without question, our interview of the day. In our next hour, Rebecca Patterson will join us. You know her from JP Morgan, from Bessemer as well. She is now at Fortress Prince, Fortress Delio. We will talk to Rebecca Patterson about the theory of the markets. Stay with us. This is Bloomberg. Good morning.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
This morning, oh, the humanity. High-flying tech, it corrects. The NASDAQ down a stunning 12%. Broader indexes, not so much. Apple craters 21%. It's Friday. Do you know where your portfolio is? The weekend beckons. Well, will we see a greater inflation by Monday or maybe Halloween? Pro-trip bonds have done nothing since the Powell presser. And it's 46 days until the election. Dr. Redfield of Georgetown Medical, Walter Reed, the University of Maryland, and Jeff Sachs's Columbia quote, Dr. Redfield made a mistake, and Jeff Sachs has an opinion. Good morning, everyone. This is Bloomberg Surveillance from New York. From London as well, Francine Lacroix surviving a lengthy interview with our editor-in-chief, John Micklethwaite, as well. It is the oddest Friday, Francine. I mean, we're all back. The traffic's back, but New York just isn't back. Is London back?
London is back in parts, Tom. So you have pockets of people coming back to the office. I think occupancy in all, and this is, you know, I didn't read any reports, but just guessing by looking at some of the people that we know in offices, about 25 to 30% back. But there is a real conversation about, you know, how you entice workers back. Do they feel safe? Do you need to pay for their transport so that they don't have to take public transport? So it's an interesting debate, Tom, and I think we probably should spend a bit more time on it to really try and understand the dynamics city to city.
And pockets of case growth in other nations as well. It's going to be an eventful October for this pandemic and certainly part of the American political debate. Right now, your briefing, your first word news in New York City. Here's Ritika Gupta.
Morning, Tom, Francine. The Chinese owner of TikTok is gaining confidence that Beijing will okay its proposed alliance with Oracle. China has asserted its right to block the sale of critical technologies, but Bloomberg's learned it's likely to greenlight the deal as long as it doesn't involve the transfer of artificial intelligence algorithms. President Trump is ridiculing FBI Chief Christopher Wray. Wray told Congress that Russia is trying to hurt Joe Biden's presidential chances through social media and influence operations. The president tweeted, quote, Chris, you don't see any activity from China, even though it is a far greater threat than Russia. Makers of the leading coronavirus vaccine candidates are making their trial plans public. The moves by Moderna and Pfizer come after increasing fears that the effort to develop a vaccine is becoming politicized. The drug makers are disclosing information about late-stage trials and how they plan to gauge their shot's safety and effectiveness. The British government says a round of informal trade talks with the European Union were useful. Meanwhile, European Commission President Ursula von der Leyen tells the Financial Times she's convinced a Brexit deal is possible. All that's a contrast to Prime Minister Boris Johnson's actions in recent days. He wants to tear up sections of the deal he reached less than a year ago. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika Gupta, thank you so much. The data right now is just soup. Red and green on the screen. NASDAQ with a slight lift. We go the other way with the major indices. The bonds, as Francine and I have headlined, really doing nothing here, particularly off the Powell presser. A little bit of dynamic in the 2-year, but it gave it up yesterday as well. Dollar weaker, but I'm going to again say, Francine, help me here. Rebecca Patterson is going to think I'm failing here because I can't do a data check because there's nothing to talk about. Seriously, Francine, Turkish lira weaker.
Yeah, so it does seem that, you know, if you look at European markets and U.S. futures are mixed because investors may be settled in some kind of holding pattern, waiting for news catalysts. So I wouldn't read too much into the markets right now, apart from the fact that they're just waiting for something because it's a little bit more on the quiet front. We do have a couple of industries that are leading lower. One thing, actually, I did want to mention, Tom, which is a huge deal, especially here in Europe, is that we understand through our own reporting that the ECB may be moving closer to lifting bank dividend bans by next year. So this could lift some of the banking stocks in Europe.
Absolutely, an important idea for Europe, but of course the book value differentials there to the United States of note. Right now, this is a joy. Rebecca Patterson held court at J.P. Morgan for years and then ran Bessemer Trust. We're looking at long-term, serious money For some reason unknown, she decided to dive off the deep end late last year into the land of Delio in France. I honestly can't think, Rebecca, of a greater shift than going from Bessemer Trust to the hellhole known as Bridgewater Associates in Connecticut. Have you survived in doing research to help these animals? What was the first day like?
So the biggest surprise for me at Bridgewater, I've been there since January, is that for whatever you read in the media, and I'm a former journalist, I have a lot of respect for the media, but I have to say, no, seriously, my experience there has been so different from what you read. It's humbling as heck. You know, it's some of the smartest people I've ever worked with, and they question everything. So everything you think you know, you have to re-examine. But it's also been one of the warmest places I've ever worked at, and I did not see that coming. I did not expect people to be calling me at home every couple weeks saying, "How's it going? I know you're onboarding via Zoom." So that's been really lovely. I'm working harder than I've ever worked in my life, but it's good. I'm challenged. I love it.
I do a banner, the Delio honeymoon, but that would get us in trouble. Okay, Rebecca, I want to get down to business right now. Bob Prince stopped the world at Davos talking about the challenges of the lower bound. It ain't working. I mean, Catherine Burton's essay the other day, your major all-weather fund, it's single-digit returns and some selected losses as well. It's just not working. Can risk parity strategies work at the lower bound?
You know, bonds certainly are not providing the level of return or the level of diversification they have had for the last couple of decades. That's obvious to everybody. But what all weather is all about is really getting smart diversification and figuring out how to get betas in different environments, whether you're in a rising or falling growth environment, a rising or falling inflation environment. And so what the team at Bridgewater has been doing for the last couple of years, but really obviously focusing very much on over this past year, is thinking what other combinations of assets can we put in a portfolio that are going to achieve that same balance. And the good news is I think there are plenty of ways to do it. So it's not saying dump all your bonds, absolutely. It's saying make sure you have that diversification and balance, and things like inflation-linked bonds, things like looking at a basket of global still bonds, things like gold, things like looking at different types of equities that are going to have more stable cash flows. There are ways you can continue to achieve that balance. So we have to be creative. But in a world where interest rates are, you know, converging around zero, but it's still absolutely possible to achieve the aims of all weather.
But Rebecca, what I find fascinating here around the core Bridgewater theme that Delio invented of return equals cash plus beta plus alpha, great. I mean, I get the foundational idea, but things have changed. Now, that formula is founded on full faith and credit bonds, is an anchor to the mathematics. Your new strategies don't have that full faith and credit anchor, do they?
Oh, yeah, sure they do. I mean, you're still anchoring to cash. You're still anchoring to what are the risk premia for different asset classes and kind of adding those up together and then figuring out how much risk you want to have in each. So I think that basic principle is still in place. You just have to think about that bond portion of your portfolio differently than the past. So I think it's not as big a deal perhaps as you're suggesting.
Rebecca, good morning from London. Talk to me a little bit about correlations. I mean, we've spent a fair amount of time also looking at the rally in August to try and figure out what these correlations mean, whether they were really any different to what we saw after the dot-com bubble burst. What can you tell us about what it will take to have correlations that go back to a bit more normality?
Well, I understand what you're saying about August and even in September with some of the moves we've seen in the markets. But I think if we take a step back, we are seeing a lot of differentiation still in the markets this year, especially around the pandemic. You know, between how different countries have handled the virus, and Francine, you in London, you're seeing one version of that. We're seeing a different version in the U.S. You have some countries like China doing an amazing job, other countries like Mexico, not so much. So you have differentiation in the virus control. You have differentiation in the policy response. So the U.S., huge monetary and fiscal easing very quickly. Other countries doing a lot less or maybe later. So that's a second factor. And then the third factor, and you just touched on this with the bank stocks in Europe, is the makeup of the economy and the makeup of those markets. And when you put those three things together, what I think you are seeing is a lot of differentiation in how the markets are moving year to date in terms of equity returns, a country and currency returns as well. A country like Mexico versus a country like China, you're getting very, very different performance. So while I hear you on what you're saying about recent correlations, I think if you can take a slightly wider lens on that question, what you're seeing from the pandemic, as horrible as it is it is providing investors with some pretty good opportunities for diversification in portfolios that comes from lower correlations because of these three factors: the virus, the policy response, and then the makeup of the economy. An economy that's heavily service-oriented, tourism-oriented, global trade-oriented is obviously going to be hit a lot differently than a country where it's more focused on goods, more focused inward domestically.
And Rebecca, one of the other things that we've been trying to figure out is, of course, these deflationary pressures that a lot of central banks are worried around the world about, including the Fed. Is there really a danger that a lot of our Western democracies and Western economies are becoming much more like Japan? And what has Japan taught us in how to deal with it?
Oh, I love that you asked that question. And Tom and I share this. Francine, I don't know you well enough to know if you're part of the club, but history is so much fun to study and understand, because while it doesn't predict the future, it definitely informs your view on the future. And Japan is such a great case study right now. As you think about what Japan tried to do when Abe came to office in the end of 2012, early 13, he launched Abenomics. They raised the inflation target. They increased asset purchases. They did everything you would want to do to try to generate some inflation. But what they failed to do in 2014 is continue with the fiscal easing to support the monetary policy. So when they started tightening fiscally, you had fiscal and monetary policy at odds, and that undermined their goal. And you saw inflation start to come back down. So what we're seeing now in the world, and I think this is such an important thing for your listeners and viewers to understand, is we've really moved into a new era, almost a new paradigm is what we're calling it. In that monetary policy, the way we grew up with it, it doesn't work anymore. The ammunition for central banks just to raise and lower interest rates, especially lowering interest rates, that's pretty much behind us. It's been behind us for a while. That's why they adopted asset purchases, quantitative easing. But even now, that's not doing the trick. Quantitative easing is going to reflate equities, reflate financial assets, but it doesn't get money into the hands of the people who need it. So now you're in this world where you have to have more coordinated fiscal and monetary policy. So what the Fed's doing to try to avoid becoming Japan, having entrenched low inflation or deflation, God help us, what they're trying to do is be aggressive, pushing up the interpretation of its mandate to try to get higher inflation, keep rates at zero at least till 2024. But that's only going to work if they have fiscal policy supporting them. And so that's what I think we need to watch really carefully right now. Is the fiscal policy going to be there to go hand in hand with the monetary policy?
Chairman Powell and President Trump on the same page with Rebecca Patterson of Bridgewater. Their Director of Investment Research. Good news for Global Wall Street. We'll continue this discussion. I'm lobbying right now for a 3-hour discussion with Ms. Patterson through the morning. That won't happen because Michael McKee says I can't do it. Raphael Bostic in the 8 o'clock hour with Mr. McKee, the first key interview after the Powell presser. This is Bloomberg. Good morning.
We never thought COVID-19 is going to hit us, but now looking back, I don't know how we could cope without this new sector.
Hong Kong is not by itself a big market, but because of the growth GVA, there's huge opportunity. So we're seeing a huge wave of biotech innovation coming in the past few years.
Almost kind of certain that at the very beginning of our journey to pursue the biotech listings, we'll see a lot of the Chinese companies.
This is just the right thing to do at the right time, and it's such a big sector.
We have a second product for approval, and now are actively preparing for the commercialization. And we're expecting to have 2 more products to be approval before end of the year. So we have a high confidence that we will meet the expectation.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Rates will remain highly accommodative until the economy is far along in its recovery, and that should be a very powerful statement in supporting economic activity.
Inflation is expected to be well contained over the medium term, remaining below but close to the midpoint in 2021 and 2022.
With inflation running persistently below 2%, we will aim to achieve inflation moderately above 2% for some time, so that inflation averages 2% over time, and longer-term inflation expectations remain well anchored at 2%.
Japan's economy has started to pick up with economic activity resuming gradually, although it has remained in a severe situation due to the impact of the novel coronavirus at home and abroad.
We believe the strong policy guidance we are providing today will serve the economy well by promoting our goals through the many possible paths the recovery may take.
Well-meaning public officials jawboning forward what we see in the future on inflation as well. That has been an ancient tradition of central bankers. Francine Lacroix and Tom Keene on a Friday. We are thrilled to bring you Rebecca Patterson from Bridgewater, their Director of Investment Research. Francine wants to go 8 different ways here, Rebecca. I've got one more Bridgewater question. The massive issue for any alternative investment hedge fund property, including your heritage of Bessemer Trust and JP Morgan, is you got to do better than the other guys. And that's all wrapped around some form of actuarial assumption or guesstimate of what the proper return is. For Ray Dalio and your shop, what's the new assumption of what your portfolios can do? Are you wedded to a single-digit grind to recover from August back to that? Or can you actually do better and deliver double-digit return?
Well, we're certainly aspiring to deliver double-digit returns. That's what we're trying to do for our clients. I think what this environment shows us in terms of returns is that you have to think outside the box. You can't just look at the S&P and think that's going to do it for you, even though that market has led for the last